भाषण सुना उसके बाद मेरा पहला एक्रोनिम
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy?
Very good morning. You're watching India Market Open, and if I'm not mistaken, is the sun shining a little brighter today? Only because better set of numbers. Relatively at the fag end of the results season overnight. We're setting up for the Trump-Modi meet. And yes, the steel tariffs, aluminum tariffs are in play, but it's seeming like maybe India will be relatively unscathed.
Yeah, hoping for all of that and more. And interesting. I mean, if you were Donald Trump, who's coming out with moves every now and then, I don't know if the sun looks any different. If you're Elon Musk and Sam Altman, then you don't know if the sun is shining any brighter.
I love that. I love that. I'll buy OpenAI. No, I'll buy Twitter. I mean, just lovely.
It's quite stunning, really.
Yeah.
And 97.4 billion, and this guy says, oh, 9.74 billion. It's quite stunning, really. But yeah, I mean, the cues for India, not too bad. Yeah? I mean, though US futures are maybe a little bit softer, but by and large, not a bad start, hopefully.
Yeah, it's the rupee which is hurting the market. So we'll keep a close eye on how the rupee opens today as well. That is the pain point for the market. Just on that note, I don't think I can imagine what it's like to be Donald Trump or Elon Musk.
Or Sam Altman.
Or Sam Altman. So US markets, though, of course, are consistently imagining what it's like to be any of the above and trying to guess the next move. They were higher, though, ahead of key inflation data, which will come out today and tomorrow. Remember, CPI and PPI, that's the Consumer Price Index, and the Producers Price Index data is expected over the next couple of days. Both are expected to be lower on an annual basis. And the important point here to look at is whether inflation hits the 2% mark that the Federal Reserve is waiting for. All eyes on the Fed Chair Jerome Powell as well. He's expected to speak in front of Congress about 8:30 p.m. India time, in case that you want to track that. Meanwhile, Treasury yields have inched higher ahead of the key inflation data, the 10-year at 4.5%. But gold is becoming the big story. Gold has soared as those tariffs have come into effect, crosses the 2,900 mark for the first time, and seems to be no letting up there. Crude prices have also climbed amidst these tariff threats. Brent has neared the $76 mark. And Asian markets have largely opened higher. Nikkei is shut, but Asian markets have mostly opened higher, given up their gains, as this tariffs on steel and aluminum come into effect from today. A lot of conversations right now around tariffs, because remember, reciprocal tariffs have to be announced from the White House, and everyone's waiting to see what that looks like. I'm going to pull up the implied open for you just for a sec before we get to our Trump tracker for the day. We're opening in the green, mildly so, but yes, a spot of green there, about 10 points up. Now, I've just picked a couple of important statements from what has come overnight from the US, and then we'll play out a soundbite of Trump as well. India, and we are meeting Modi soon, and he has a lot to talk about with the president. This is a statement from a White House functionary. And he goes on to say, because they have got tariffs, and I think the trade weighted average is a little bit short of 20%. They have rates that are enormously high. They are lockout rates. President Trump believes that at the very least, everyone should agree that if they are charging us 20, then we should charge them 20. So this is coming in from Kevin Hassett, the NEC director. I thought this was important, Neeraj, and he's saying this in an interview to a channel there. But this becomes crucial because they are very, very clear about reciprocal tariffs without any exceptions. And you know, there's a statement from Ro Khanna, who says America has a trade balance with India, and he goes on to say it's okay if we can sell a little more to India. So some of those exceptions will have to be made from our end as well.
Yeah, and it's okay, right? I think yesterday, as you and Samir were talking about as well, yeah, we can take some more bikes. We can, and I think there is merit in, at this point of time, to try and show diplomacy in tariffs as well from India's part. I think it's absolutely fine.
So economists who are completely neutral to the context would say that high tariffs is not a great thing for any nation. You kill domestic competition, and that's not the way to go. So from that context, yes, something to root for. But let's listen in to what President Trump said while signing those 25% tariffs on steel and aluminum imports.
We were being pummeled by both friend and foe alike. Our nation requires steel and aluminum to be made in America, not in foreign lands. We need to create in order to protect our country's future, a resurgence of U.S. manufacturing and production, the likes of which has not been seen for many decades. So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States. Now, we're going to be meeting over the next 4-week period, maybe on a weekly basis, and maybe we'll do a couple of them at different times and maybe together. But we'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips, and we're going to be doing some other things in addition to that, all which will bring in a lot of jobs into our country. Cars is going to be a very big one and a very important one, and America is going to be stronger than it ever was before.
Okay, so that's all the Trump talk. Some of it weighing in on Indian markets, and that was visible through trade yesterday as well. The Nifty about 0.75% down, same for the Sensex. Bank Nifty was relatively in a better shape. I wouldn't say great, less than 0.5% down, but IT stocks continue to show weakness. Small and mid cap also in quite a bit of pain. If you look at how the small cap and the mid cap index ended, that's where the real pain is. 2% down on the mid cap and small cap and indices thereabouts. Realty stocks hurt the most. The Nifty Realty, one of the top losers. Metal stocks hurt the most because of that tariff coming in. But on balance, could you see a recovery in metals today? Hindalco numbers and not Hindalco really, but the commentary coming out of Novelis, not that negative. The third quarter weak as expected, but their outlook for the fourth quarter has been better for Novelis, so that impact you could expect on a Hindalco today. They're also going on to say that the impact on tariffs will be minimal and they're expecting a rollback. So those are some of the interesting factors to see. But meanwhile, I reckon, Neeraj, it's the rupee, which is ensuring that FIIs don't see any real reason to come rushing back into India.
Yeah, but that's and it's an interesting conundrum, if you will, Tamanna, because the yuan is depreciating at the same time, and China is actually seeing some fairly strong inflows as well. So
yeah,
it's kind of a difficult one to circle the square, if you will. But the one thing is certain, that almost every intraday recovery or a 2-3 day recovery is seeing selling.
Sold into. Just for the yuan and rupee comparison, and you're absolutely right. If that's the reason here, that FIs coming in think that their valuations are just dropping because of currency, but here the underlying markets are weak as well. So it's on top of that.
Yeah.
That's
agree.
Not the case in China, where there are fundamental reasons to come in DeepSeek and what have you may.
Plus the valuations are reasonably attractive there now, wherein while we have corrected here, there was this very interesting Bernstein note which said, right, that now valuations are good, but maybe there are some more downsides because of cyclical multiple downtings. By the way, Tamanna, speaking of that, before the trade setup, I have a table which shows the kind of corrective moves that have happened in specific indices, right? We speak about a correction of 10-12% from the top. Look at this. Look at the kind of downticks that have happened. Now, this is from peak. So if you see that FMCG, auto, metals and consumer durables have already corrected 15% from the top. These are stable indices correcting over 15%. Now extend that, PSU banks, real estate and oil and gas have corrected 20%. So technically these are already in the bear market. And you want to extend that argument a bit further, PSC, media, energy are down over 25% from the peak. There's some serious correction that has already happened in a lot of indices, well beyond the 12%, 13% for the Nifty. So please bear that in mind. But the problem is, as we said, that yes, Tamanna is right. I mean, rupee by itself cannot be the reason, but rupee is an added reason to what is otherwise looking like a very weak trade, and which is why every single rally, intraday recovery or what have you, is getting sold into. So that is one problem. And look at the supports. The put writing, I mean, 78.64 lakh contracts of put writing at the 22,500 strike. That's 800 points below. That is the major support. Now, of course, there are immediate supports at 23, 300, 23, 200, etc. But the largest support is at 22,500, which means option writers are believing that there is a high probability that the markets may even roll down until those levels as well, because of lack of triggers maybe. But the good respite is, Tamanna, that yesterday was the Nuama conference which was on, and people that I spoke to said that the conference was full, both FIs or DIs. In fact, one person said in jest that the DIs sounded a lot more skeptical than FIs.
There might be reason for that. That might be the Esnarain factor.
Yeah.
That's a different story.
Maybe that too, right? But there was a fair India interest even now, and there were 2 or 3 basic questions to managements that how is Q4 looking? Is your sales growth and PAT growth looking on track for FY26? Essentially, and on tariffs, what is the impact of tariffs on your company? So I think people are not too worried now about valuations. Earlier the conversation was entirely about valuations, right?
Yeah.
Now valuations is not a question. Now it is there a tariff impact and is there a growth issue or no? So as long as the company says that there is no growth issue, it's fine. A lot of individual companies on which there was mad interest, a consumer durable back-end manufacturer, some splendid requests for meetings out there, etc., and all of that. So that was good. And a lot of people believe that the Modi-Trump meeting could be the key catalyst for dispelling trade war fears. And if indeed that happens, good
from the Indian perspective.
From the Indian perspective,
yeah,
then that might actually help. So who knows, Thursday, Friday in particular, could be a key catalyst for the market.
Yeah, Friday becomes an important day. But then, since I brought it up, I think quickly, just for a second, these comments from a top fund manager. Esnarain has been swirling around, and I think important to look at the perspective of it, where he has said that what is happening with small and mid caps. Maybe those are some of the conversations we can have through the day today.
Yes, we should.
In terms of why it's so skeptical, that could also explain while the indices were down about 0.75%. It was the small and mid caps that were getting hammered the most.
Yeah. Small and mid caps got hammered the most yesterday, as is now seemingly been the want, but let's wait and watch. I think Morgan Stanley was putting out the note saying that they are not too negative. They are biased towards large caps right now because of relative safety. But a lot of small caps have corrected significantly, and the growth numbers out there look okay. So could be interesting. Today we're getting a very good guest in Sridhar Sivram. We're lovely to talk to him about all of this as well.
Of course, but before that, there's so much more. Let's get to our stocks of the morning. And I'm starting with Eicher on a consolidated basis year on year. Eicher Motors, what I'm looking at. First, thumbs down there. Revenue is up 19% to 4,973 crores versus 4,179 crores. EBITDA is up 10% to 1,201 crores. But why is it a thumbs down? Largely because of margins. The margin slide from 26.1 to 24.2% is the reason. Net profit is up 1,171 crores versus 996. Just a few notes I'll go through to give you a sense of what brokerages are saying on Eicher. Citi has maintained a buy with a target of 6,050 from 5,350, but they do say that the third quarter results are slight miss in standalone EBITDA. Other income is what has boosted PAT, so that positive PAT figure that you're seeing is from other income. The robust performance has come in from VECV and increased valuation multiples given better volume prospects. Focus is clearly on growth, with Royal Enfield expected to maintain its dominant status. Morgan Stanley, meanwhile, maintains an underweight and hikes the target price from 3,855 from 3,655. They do say, though, that weaker than expected Q3, a miss on EBITDA as far as estimates go, owing to a weaker mix plus higher promotional and launch expenses. Growth over margins is the right strategy. Stock pricing and high growth and high margins, achieving both will be tough, says Morgan Stanley. UBS, meanwhile, has downgraded to neutral from a buy. They've cut the target price to 5,650 from a 5,950. They say margin miss due to change in mix and higher marketing costs. Pivot to growth to restrain margin expansion, like the growth pivot, but downgrade owing to significant outperformance. See outperformance compared to industry, but we do not see margin expansion. So like I said, that margin number is the reason why there's a thumbs down, though on other metrics, the numbers don't look too bad. Apollo Hospital, though, is a thumbs up. Segmental performance has been pretty good. Healthcare services has been pretty good. They're focused on higher growth in specialities. That's a 10% year-on-year volume growth. That has aided higher revenue realization. Overall, hospital occupancy has also risen to 68% from 66% last year because of more patient volume. Revenue up 14% to 5526 crores, which is slightly under the Bloomberg estimates though. EBITDA is up 24% to 761.5 crores. And EBITDA margins have expanded 12.7 to 13.8%. Net profit is also up 52% for Apollo Hospital. Their limited lifestyle performance, that wing's revenue also grew 15% year on year because of the network effect. And the PAT was positive versus loss of last year on account of growth in operational revenue. This is for the core Apollo Health. So overall, Apollo seems decent. We will hear from the management as well ahead on the show, so stay tuned for that. And the third one, MTAR Technologies, is a thumbs up just because of the sheer numbers. And I would say the order flow is the reason. Revenue is up 47% to 174 crores. EBITDA up 39% to 33 crores. Margins, though, have come down a tad, 20.2 versus 19.1. But net profit is up 53%. The order book has stood at 1,030 crores as of December 2024. And 621 crores of orders have come in the first 9 months. They expect orders in the civil nuclear sector in the near term as well. So, which is why MTAR looks pretty interesting.
Interesting name to end with, and could very, very strong performance. You know, I really wanted to take Nalco as one of the stocks. The only problem is because metals are a bit uncertain, it becomes difficult. But what a performance by what numbers? I mean, blowout quarter in terms of margins. But we'll leave. Okay, maybe just mention the Nalco numbers, though it's not one of the key stocks. But Tamanna, the margin performance, right, in a quarter when Novelis has come out, Hindalco has come out. I mean, this is just exceptional performance by Nalco. Yeah. So let's see how this one reacts. Just the caveat that both on Hindalco because of Novelis or Nalco, because of the pressure on metals, it becomes difficult to call whether it's a big thumbs up or no, but the numbers by themselves look okay.
Yeah, I mean, the thumbs up, I would say, is basis the numbers.
Basis the numbers.
There could be 100 other factors that come in through the day, that some seen, some unforeseen. Yeah. But we're going to be speaking to Nalco ahead, so that'll be interesting to see as well.
So looking forward to that. So my top 3 stocks, and I really wanted to take Nalco, but not taking it. My first stock is Nykaa. I thought the numbers look very good, a very strong quarter 3. The most important thing to my mind, so these are the numbers, okay, let's pull up the numbers first. Of course, revenues are up, EBITDA margin 63 basis points at 6.2 versus 5.56, net profit up 51%. The point is management highlighted easing of aggressive competition. Which platform company or tech company is talking this? Everybody is talking about aggressive competition. Nykaa is highlighting quite the opposite, which actually stood out for me. Jefferies has raised the target price to 240. The others also have kept target prices around 200 or 220 or thereabouts. So most people bullish. Let's wait and watch what Nykaa does in the session today. It's a thumbs up. So keep an eye out for Nykaa for sure in the session today. The other one is Escorts. Now the numbers were okay. I mean, if you just look at the headline numbers from Escorts, revenues 8.5%, margins marginally lower, maybe 11.4. The estimates were 12.6, but 12%. So you could argue that on the margin front, they've dipped a little bit. Net profit 323, estimates was 315, so largely in line with estimates. But here too, the management has pointed out a robust Q4 for the industry, 15% growth, on the lines of what M&M said as well. So tractors might well be in a good wicket. And Escorts has guided for market share gains in FY26 once some of their capacities come on stream in the second half. So do keep an eye out for Escorts. Remember yesterday a lot of technical charts were constructive here, ended in the green on a bad day yesterday. Let's wait and watch what Escorts does today. I would suspect the commentary looked solid and therefore could see some upticks. And my version of Tamanna's MTAR is Genus Power. Because again, a stock which came out with a blowout set of numbers. Revenues at 604 crores versus 259 crores. Margins at 15.4% versus 5.2%. And net profit at 56.65 crores versus a loss of 9.92 crores. Blowout set of numbers, could very well in addition to MTAR, in addition to NALCO, see some very strong upticks. So keep this one at the back of your mind as well. So these are our top 6 for the morning.
Okay, some more earning candidates to watch out for. Mahima is joining us with other stocks that should be on your radar this morning.
Right, so I'll start with Grasim, where revenue did see an uptick of around 27%, but EBITDA was down 48% for the company. Margin slid to 3.3% from 8.2%, and net loss of 169 crore was incurred versus a profit of 236 crores. Now, a couple of reasons why this has happened. For them, overall, the raw material prices have gone significantly up. In terms of the key highlights, how segmental performance has been, I'll take one segment each at a time. The cellulosic fibers revenue growth was around 6%. However, EBITDA degrew by 18%, and this was because China operating rates improved by around 89%. Chemicals revenue was up around 12%, but EBITDA increased by 25%. So good numbers for chemicals this time. Caustic soda international average spot prices stood higher, however, by 16%. Building materials revenue grew by around 10%, and EBITDA was down by 14%. In terms of Birla Opus commentary, out of total 6 plants planned, 4 are already operational, and the total capex as of December 24 stood at 9,015 crore, and this is 90% of the total capex planned. In terms of financial services, the overall lending portfolio was up by 27%, and total AUM grew by around 23% YOY. Other businesses saw the pain. EBITDA remained impacted by exceptionally high input prices in the linen segment, and renewable business, however, saw a cumulative installed capacity up by around 37%. The next one on my list is Bata India, where revenue was up 1.7%. Decent set of numbers for the company this quarter on the back of festive season. EBITDA was up 9.4%. Margins improved to 21.7% versus that of 20.2%, and net profit was up 1.2%. Of course, in this net profit, there was a one-time exceptional item of 10.8 crores towards the VRS payment for a particular factory. And Hush Puppies was the one that has kind of augured the growth in terms of revenue, because the volumes for Hush Puppies grew in double digit. That is why we are seeing an uptick in terms of revenue. So this is these are the 2 counters on my radar on the back of Q3 earnings.
Yeah, well, certainly watch out for these. Thanks a lot for that. So, well, that's a few more counters, and I'll get in Rucha to talk about some more. Lupin, IRB Infra, Shriram Properties is also on our radar because of some developments in the Chennai area, if I'm not wrong, as well. Rucha, why have you chosen these 3 stocks?
Yeah, you're right, Neeraj. Good morning. So I'll start with Lupin. Well, the company has received approval from US FDA for its abbreviated new drug application, which is for a bromide nasal solution. And this product will be manufactured at Pithambar facility in India. So this one is a thumbs up for the company. Next is Shriram Properties. Well, this one has signed a joint development agreement to develop a prime land in Chennai. And as per the company, this also offers strategic advantages as well as economic vibrancy. The aggregate saleable area is of 3.2 lakh square feet. And this is set to be developed over the next 3 years. Now, the aggregate revenue potential from this project stands at about 350 to 400 crore rupees, and this one is being targeted for launch in early FY26. So again, a thumbs up for Shriram Properties. Last one is IRB Infra. Well, the gross stall collection is up about 20% at 560 crore rupees versus 467 crore rupees, and the company has said that it will continue the momentum due to the recent budget allocations as well. So these 3 thumbs up for the stocks to watch in trade today.
Certainly watch out for these. Okay, thanks a lot for that, Rucha. Now, focus metals. First, Hindalco's subsidiary Novelis reported a fall in Q3 profit, but Novelis has made some interesting comments about what lies ahead. Mihika joins in with the details and, more importantly, the commentary for the quarter and the quarters ahead. Mihika.
It was a weak quarter, but this was already indicated by the company. We've seen a net sales see a 4% uptick on an annual basis. However, the company's adjusted EBITDA was down 19% to 367 million, but this is a level that was indicated by the company in the preliminary business update. And the adjusted EBITDA per ton was also down 19% to $406, and net income saw 9% fall to 110 million. And if we exclude the special items, which was basically the impact on the Sierre plant of the company due to the unprecedented floods, then the net income of the company is down 32% on an annual basis. In terms of volumes, that flat road product shipments were at 904 kiloton, around the same level as a year before, but that's a 17% fall on a quarter-on-quarter basis, and the volume decline was largely led by lower volumes in the automotive as well as the specialty segments, and the fall in EBITDA per ton was mainly due to three factors as per the company: higher scrap prices, lower volumes, and an unfavorable product mix. In terms of their con-call takeaways, well, in terms of their demand outlook, global beverage packing and aircraft demand remains strong, but there's weak macro environment for their auto segment in Europe, and China is also seeing slower growth in the same segment, but they do expect a seasonal uptick in their specialty segment. When talking about the impact of the Trump tariffs, Novelis management has also said that there's a marginal initial impact until the company gets an exception, but last time the company had received an exception for its intercompany plant material movement, and in the medium to long term, the higher premiums will benefit the spreads as well as the margins of the company. And lastly, when they talk about guidance, well, Novelis does expect Q4 earnings to be stronger on higher sales and better scrap usage, and they believe that the impact of the elevated scrap prices has bottomed out, and better CAN prices from January 2025 will benefit margins of the company. They also stated that the Bay Minette project will still give double-digit return on equity despite the scrap spreads coming down, and their annual capex guidance is on the lower side of $1.8 to $2 billion. And lastly, their net leverage will peak out at 3.5x versus 2.9 times currently.
Okay, so Nalco is the other one though. We were speaking about it briefly earlier, Mehika, and you tracked the company. We're just trying to understand what the internals show us in terms of why this is looking like a strong quarter.
A very good quarter. We've seen revenues grow 39% and EBITDA and net profit both more than tripling. But the interesting fact is that even though Nalco is one of the largest integrated bauxite, alumina and aluminium players, 57.5% of its Q3 operating profit this quarter was from its chemical business. Now, when you see a deep down, even in Q3, revenue uptick in aluminium business was 12%, but the revenue growth in their chemical business was 78%, and now the segment contributed 49% of their Q3 revenues versus 38% a year ago. And the operating profit also was a huge turnaround. It stood at 1,287 crore rupees compared to just 217 crores a year ago. And we'll dive deep down to break down the chemical business, but these are the numbers that we've seen right now.
Okay, so Nalco looks interesting, and another reminder, we're going to be speaking with the management shortly. But we'll take a quick break. Before we go into that break, some exclusive voices on the sidelines of the Aero India 2025 event. Our colleague Sanjeet Mangat is there, and he caught up with BEML, Sign, DLM and Dynamatic Tech's management at the Aero show to get a sense of what is new.
Over the last 18 months, order book is one thing we are working on, but at the same time, we are trying to create the value of the country. So the engine program, the boat shovel for the mining, the porter grader, the bulldozer, the dump truck, and now the bullet train. Then we are getting into maritime. These are all basically value creation in the long run and creating value for the country, removing the dependence of the country on foreign OEMs. So that is what we are doing, and I'm very happy that we are able to serve the countries in that well.
We are also doing a complete for an off-highway vehicle for a customer in Europe. We are doing a complete system which is sense and learning, so that it can avoid any obstruction and damages that are coming. So that's a play with radars, with cameras, with ultrasound sensors, integrating multi-sensor data fusion and predictive, and then controlling this part. And for automotive, it has to come at a very lean price. And we see very strong applications of this in defense, for example, in UAVs, urban air mobility. So there is enough from a technology level, quite a bit of crossplay. That's one example I can give. There is also in terms of motor controllers and the kind of power rails. So while you see automotive is 400, 800 volt DC, same thing you see in urban air mobility. Electrical aircrafts are also talking about similar rate. And there we have the expertise in terms of power conversion, motor controller design. So that's becoming applicable.
right, just a couple of minutes before the pre-open session begins. A mild uptick in the implied Nifty is what we've been seeing since morning, improved to about 15 points, but don't expect fireworks. I suppose the question is that will any kind of a rally be sold into immediately? Kunal Rambe, I just want to come back to you on the point of the Bank Nifty, and this is something you said at the start of our conversation today, that Bank Nifty is the bet to make. Is it safe enough in your view, or is this the time to go out and build positions on the Bank Nifty?
So again, Tamanna, there are two ways to look at it. The first is capturing the momentum, and second is looking at the risk-reward ratio. So if someone wants to play on the risk-reward ratio, yes, Bank Nifty is a clear buy with the stop of around 49,600 levels on the spot. But if someone wants to go ahead with momentum trading, then the breakout is placed at 50,100. Above that, I think one can easily build on the position, and the targets can be 50,500 by the weekend.
Okay, Bank Nifty is one to look at this point. Sunny, I don't know if you're going to take a bet right now. Would you veer towards the large caps? And yes, this whole context and this whole question about small and mid caps, and whether they're as safe as expected, should you move out of them to large caps? I'm wondering how you think about it, and if you are going to move to the safe and the large cap space, would some of the financials be on top of that list?
Yeah, so I think, Tamanna, what I feel is that ultimately the bottoms-up growth story is something which will be handpicked by the investor over the period of next 3 to 4 months when markets are wobbly. And again, so rather than think whether it's a large cap, mid cap, I think the companies which are likely to deliver healthy growth over the next 4 to 8 quarters, those companies are on our radar. A case in point, for example, a structural steel tube players like APL, Apollo Tube, which is one of the largest player in the structural steel tube segment. And at the same time, a smaller player like High-Tech Pipe, which is expanding capacity rapidly, and we have seen a massive correction in the valuation as well as stock price. So we like this segment, structural steel tube player, APL, Apollo, and High-Tech Pipe. For example, within EMS, Sirma, which was a clear underperformer since last 2 years, we have seen many other players trading at 60, 70 price to earning multiple. Sirma since last 2 quarters has been delivering a very good set of numbers because of the favorable product mix. Margins have expanded, and we believe the fair value of Sirma is close to 650 rupees. So Sirma within the EMS space is something which I would like to go ahead with. Within digitization space, I think which is again driven by the government inclination toward the PAN, Aadhaar, e-filing, so Protein e-governance, and at the same time e-Mudra, both these companies are on our radar. So if somebody is looking to invest from a medium to long-term perspective, Protein and e-Mudra, we would like to add in our portfolio. Within capital market play, MCX, so as we can see that commodity prices, especially gold, which is one of the key contract business volume as far as MCX is concerned. They are also the very story similar to BSC, where we have seen an option volume increasing multifold during the last 1.5 to 2 years. So MCX within the capital market play. Again, I think it's the bottoms of market, so stock specific rather than a large cap, mid cap, or small cap discussion.
I'm just wondering, since we've been talking about gold and the way gold is moving, I find it interesting that the equity play is to hop on to gold. I don't know if that was the strategy that you wanted to use, Sunny, what would you look at?
The strategy to ride on gold can be two-way. MCX, we have already discussed that because of the increase in contract value, ultimately the exchanges and the brokers benefit, basically commodity side of the business. And obviously, it's a no-brainer that all the gold loan companies to benefit out of that, whether it is Muthoot or Manappuram, as LTV keeps on reducing. So there is a probability that the loan disbursement can be on a higher side over the period of next 2 to 3 quarters. And coming to jewelry, again, I feel we have seen that historically, whenever there is an increase in gold price, sudden increase in gold price, there may be a temporary dip in volume for a quarter. But again, because of the FOMO factor or because of the value attached, because of the wedding and so on and so forth, I think the jewelry player also tend to benefit maybe after a lag of 1 or 2 quarters. So within jewelry, again, I think regional players as of now seems to be doing well. The reason being that they are penetrating into a new territory. And at the same time, the mix of studded jewelry keeps on increasing gradually quarter on quarter. So Senco Gold is under our coverage, and we like that. And as we all know that the lab-grown diamonds have prices are significantly lower as compared to the natural diamond trading at 110 price, and the adoption is increasing. So IGIL, which is a recently listed company, basically into a lab-grown certification business. So again, that's the clear-cut market leader. So that is the one play I would like to take as a proxy play to the adoption of lab-grown diamond.
Okay, now just want to see what the pre-open rates are suggesting for some of the metal names, right? Because there is this tariff formalization, if you will, and it could impact all kind of metal names. Hindalco is down 4%, but I want to see if Nalco and the other steel companies are also reacting, because they reacted a bit yesterday itself, remember. Nalco maybe marginally higher, sale marginally higher, so no big bang reactions. The reaction in Hindalco, if it is 4% as well, is more due to Novelis and not otherwise. So no major reactions as thus far in the first 4 minutes, but let's wait and watch if that were to change a little bit or no. We've spoken about some of the metal names already, so bear that in mind, but it'll be interesting to see if there is more in store. Meanwhile, 9:04 or almost 9:05, it's time for the big brokerage call of the day. Morgan Stanley is overweight on Oil India, has hiked the target price to 625 rupees. Harsh joins in with details of this call. Harsh, oil upstream is not necessarily in favor. Why is Morgan Stanley constructive here? In fact, I think even CLSA is up the target there, but tell us the Morgan Stanley rationale.
Well, yes, interesting one. 55% upside from here, and therefore could well be a big positive one. The stock has derated in that sense, is what Morgan Stanley believes. Now, over the last 2 quarters, you've seen the stock derate 40%. It's a large correction that the stock has gone through. What could the concerns be? One, you have worries about production growth. Second, no terminal value for 40-year reserves are currently being factored as per Morgan Stanley. And third, rise in average selling price is not exactly getting fully factored. And some of those may well be upside, may well pose potential for upside for an Oil India. One, it's the fastest growing hydrocarbon producers globally. Second, it's also a rapidly growing market for natural gas, especially the Indian market. It's a key gas producer with unit profitability expected to double by 2028. Higher than expected energy prices are expected to aid the company, and energy prices also to be aided largely because of strong demand given the AI push. The demand story also does not entirely depend on completion of gas pipelines as per Morgan Stanley. They've in fact de-risked their estimates to a certain extent, and production is expected to be just 3% in FY26 growth, 3% growth in FY26 and a 19% CAGR thereafter to FY28. They're expecting a 12% FY25 to 28 CAGR with regard to production and a 16% earnings growth to likely unwind over the next 3 odd years. Your expected ROE profile at the end of all of this is expected to be at 18%. The current value rather at 7.8 odd times price to earnings and a 4.5% dividend is also very, very lucrative versus global peers. So they are very positive with regard to this one.
By the way, like I said, even CLSA has upgraded Oil India from underperform to a hold. So bear that in mind. Their target is 450. Okay. Harsh, thanks for putting that into perspective. No big movements here though, unfortunately. Oil upstream isn't quite really shaping up very well. Sunny, are you enthused to buy? I mean, what is your brokerage views or house views on some of the oil upstream companies, particularly Oil India, let's say?
I think, Neeraj, no doubt that in terms of valuation, all these companies are trading at a very cheaper or a reasonable valuation. But my only worry is that, looking at the Trump narrative earlier where, yes, time and again stressed that oil prices need to move down and that will bring down the inflation for entire global environment. And that's something worries me, at least for an upstream company. So at a current juncture, in fact, I would like to be more bullish on downstream companies than oil marketing companies. That's the scenario which I am playing out, that I'm riding on that. Going forward, oil prices will remain subdued, and that will benefit oil marketing companies more rather than upstream companies like Oil India and ONGC.
Okay, 908, the pre-open rates have settled, and as the rates have settled, the Nifty Bank and the small cap indices are likely to start off with a weak footing, but the benchmark indices flattish. Nothing too dramatic is the point. I wonder what Escorts, MTAR Technologies, and a few others. So Escorts is starting off lower, by the way, MTAR higher. Nalco should come up on your screen. iShares is down 3.5. Nalco should come up on your screen. We should also try and see what Genus Power is up to, because they came out with a very robust set of numbers as well, 3% higher, but no rara moves. Nika maybe, but no rara moves into any of these individual names. So bear that in mind. Nika too, absolutely flat, no moves whatsoever. Now, Kunal, any of these stocks, the 4 or 5 that I mentioned, on results, some of which have started off well, some haven't, like the likes of Escorts haven't. Any thoughts on any of these on the charts?
Neeraj bhai, again, most of these counters are in sideways consolidation, and we discussed about metals. Now for Escort, just for an example, the counter is still near the previous bottom itself and opening gap down. So I think if 3150 is held on to, then with 3 to 4 days of consolidation, we might think of initiating a buy on this. But for now, these counters which are gap down opening, one should not even try to catch the falling knife, because uncertainty is very high, and at the same time, when the markets are bad, any shorting opportunities might just drag the counters even further on the lower side. So let's not catch the falling knife, but certainly look at those counters which are showing strength in even this kind of market. So the likes of Adani Green, which is looking very attractive at this point in time, or say any other counters like DAM Capital, which is near the extreme low level and reversing from those levels, can be seen as the buying opportunity.
DAM Capital 282. An IPO that on the opening day was at 430 and is now at 282. So I mean, charts wouldn't show this per se, but 282 from lows starting to bounce back. Let's see the Adani Group stocks, by the way. Adani Green is up today. Let's see if Adani Enterprises and Adani Ports and some of the others are doing well. About 1% higher, nothing too dramatic. Adani Ports flattish, Adani Green in the green, of course, and some of those others could be interesting ones to watch as well. So a few things to take note of. Sunny, what's actually gotten really pummeled out of shape and out of favor completely are the renewable energy companies, right? Suddenly everybody is saying that the multiples out there should be brought down. The stocks have corrected a bit. The growth still looks to be there. Have multiples corrected enough? Would you buy into this weakness, or would you still stay on the sidelines?
Neeraj, if I have to bet on renewable energy space, I think Waaree Energy's post-correction look valued at a significant value, which one can see in Waaree Energy. We have seen a very good set of numbers also during this quarter. Again, sitting on a very robust order book. I think the valuations have done at least a decent, not so. So we can say that annualized profit number can be between 2,000 to 3,000 crore number, and market cap is close to 65,000 crore. So I think solar module manufacturer like Waaree Energy continue to can be looked upon from a renewable energy space. KPI Green again, which is under our coverage. There also we feel that which is a mix of EPC as well as IPP player. So there again, outlook seems to be pretty robust as far as renewable energy on the solar side is concerned. On the wind energy side, I think Inox continue to do well. So Inox Wind is the one company which we feel will continue to deliver a healthy set of number over the period of next 2 to 3 years. So yeah, these are the few names which we like from the renewable energy space. And again, a proxy play can be a transformer company. So for example, TARIL, Transformer and Rectifier India Limited, there we have seen that new capacity is coming up, and that will drive a very good earning growth over the period of next 2 years. So Trill, I feel the fair value is close to 1,200. So Trill can be, transformer can be one of the proxy play for renewable energy.
Okay, what's on focus this morning, even as the pre-open ends? Look at a Muthoot Finance, look at a Manappuram, CLSA note out, which is quite gung-ho about coal financiers, so that's on focus. Nalco, we've been talking about good set of numbers. Varun Beverages, the numbers were good, but the notes on it is what is making Varun Beverages exciting this morning as well. Kunal, I'm wondering if Varun Beverages is something that you like on the charts?
Absolutely. And again, this is the counter which is in the sideways consolidation since Feb 2024. It's been almost a year. And look at the support level. Consistently, this counter is held on to 540 zone. It's opening at 555. So with the stop of, I think, around 540 on the weekly closing basis, one can certainly initiate a buy. On the upside, because it's a range bound, so one needs to take an exit near 625 to 630, which is the positional target.
Kunal is very bullish. So I'm going to ask you, Kunal, where is it that you are going out short on today?
Honestly, Neeraj bhai, not looking at the shorting opportunities, but mainly on the long side. So difficult to call for the short as of now.
So if I were to pin you down for one top call after the pre-open session, as the pre-open rates, what is your top stock call for the day?
I'm very comfortable with Bajaj Finserv. As Sunny mentioned about Bajaj Finance, Bajaj Finserv is looking very attractive to me. With the stop of 1770, one can definitely go long on this, and the upside targets can be 1900 to 1925.
Okay, Bajaj Finserv is Kunal Rambia's stock call. Oh, watch out for that. Kunal, couple of messages talking about Marathon Next Gen. As stop losses hit there, would you reinitiate buys or would you wait for the time being? Quick 20 seconds.
Absolutely sideways, stop loss being 510. One can initiate buy, fresh entry also at this level, and the upside target can be 585.
Okay, so, well, but remember the earliest stop loss is hit. Please get out of the calls. Never compromise with the stop loss if you are trading indeed. So bear that in mind, viewers. But here come the opening rates for our markets this morning, Tuesday morning. Well, flattish really, with the Bank Nifty playing culprit. IT should be maybe flattish to marginally in the green, if you will. Let's see. No, flat, completely flat, and I would guess mid caps and small caps would be corrective, or maybe flat. Mid caps are flat, small caps corrective, 0.5%. No surprise there. They're really taking it on the chin, the small cap space. Let's get the heat map up on the screen. Even Stevens, but it's not the mood of the breadth of the market, by the way. iShares slam dunk, 5.5%. Never mind the fact that Citi and some of the others raised the target, and Volvo iShares has done very well. The slight miss on results has led to a 5% slam dunk on this one. M&M also corrects a little bit. There is weakness in BPCL, there is weakness in Power Grid, Coal India. HDFC Bank yet again, another day starts off in the red. So there the mood isn't that sanguine, if you will. Banking particularly, ICICI Bank too in the red. What's doing well? Adani Enterprises, top gainer on the Nifty. Hindalco up about 1%. Grasim up about 1% after the numbers. Bajaj Finance, Reliance, ITC, Infi. So some heavyweight support out there. HUL2 in the green, which is helping the index stay afloat. But otherwise, a lot of stocks correcting. But the standout feature has to be, Tamanna, either Grasim and Adani on the upside, or an Eicher Motors with this large 5% downtick in opening trade today.
Okay, so Grasim actually numbers weren't that great, but the street seems to like it. Hindalco is seeing the Novelis effect that we were talking about. Q3 numbers were negative for Novelis, but their Q4 outlook was good, especially in tariffs. Adani and watch out for the entire Adani pack. The key law under which the Adani group was prosecuted by the DOJ in the US has been quashed. There is a move to quash it by the Trump administration. It was law brought in under the Biden administration, which is why you should watch out for Adani Group stocks this morning. But Eicher, yes, we called it that margin hit has been painful for Eicher. Growth is coming at the cost of profitability. Street is not liking it. Let's pull up the small cap and mid cap indices before we get to the sectoral heat map and just give you a sense whether the cuts are deeper here. Yes, it continues. This is a pain point right now for the market. Small cap 250 at 1% down. I mean, not to put it to one statement from one very, very crucial member of the mutual fund industry. But having said that, that question mark there, that unabashed question mark there, maybe has given fuel to the fire which was already on. So you're seeing the Nifty small cap 250 also about 1% down. Let's pull up the sectoral heat map for you just for a second. India VIX in the green, not a great sign. Nifty metals are recovering, and we told you this morning that you might see a bit of a recovery in metal stocks because the kind of hit we saw yesterday because of global tariffs was unaccounted for, in the sense we don't export that much in this space to the United States. Nifty Realty taking a beating for a second day in a row. So is Nifty Healthcare. I wonder what's happening with Apollo. We'll look at it in just a minute from now. But let's look at results impact that we've been tracking. Nalco, Nykaa, MTAR. Some of those results which looked good on the face of it. Is the street enthusiastic? Yes, to some extent. Nalco, quite a blockbuster. Street is giving it 3.5% up. Look at it in the context of the kind of morning that we're having, and that's fairly good. Nykaa also decent numbers, 1% up on the stock. MTAR, very good numbers, completely flat right now. Let me look at Bata, Apollo as well, among other results. We already saw what's happening with an Aisha. Bata showing a profit after a long time, festive season boost there, even though their profit figure was actually slightly below estimates at 58 crores, but about 1% up on a Bata this morning. Apollo and Aisha both down in the red. Apollo seemed okay, but street not liking it at all. Aisha about 6% down now. Gold financiers in focus as well, because gold rates, remember, at new highs, but it's seeming negative for both Muthoot and Manappuram. There's a CLSA note out on there as well. So difficult to spot the winners this morning, Neeraj, I would say. Overall, the sentiment once again right at the get-go, that too, seeming fairly negative.
Certainly not positive for sure. I think that's the easiest way to put this into perspective. Now, before we start a pharma conversation, and I think it's important to put that into perspective because there are a lot of stocks which are doing very well but corrected yesterday on the fear of the tariffs. Final comments from our experts. Kunal, you're constructive, yes, but the markets are not quite in the mood, in the celebratory mood at all. What are the stop losses that you're putting in place for your long calls on the indices?
So on the Bank Nifty front, as I mentioned, 49,600 seems to be the good support, and that can be the stop loss for now. On the Nifty front, though the gap is already filled, but the stop loss can be 23,250 on the spot Nifty levels. So these are the levels to watch out for indices.
Okay, and Sunny, very quickly, are you in the buying mode already, or would you wait for some corrective moves further? As a house, what are you telling your key clients?
So Neeraj, we have been advising that in case you want to deploy a fresh capital in the market, better to deploy gradually over the period of next 2 to 3 months. What I feel is that in the month of April, May, when we listen to the March quarter results commentary, at that point of time, there may be an optimism in the commentary that at least for FY26, we may see a kind of double-digit earning growth from the key heavy weightage in the indices companies, so large cap companies. At that point of time, market should stabilize, and I believe the uncertainty pertaining to this tariff war will also get over the period of next 2 months. So I think gradual deployment strategy is the right way. So you need to have your set of universe ready, spread across predominantly large cap, mid cap, and small cap, which are likely to do well over the next 2 years, and gradually deploy all your capital till the time till March or April. Yeah.
Got it. Okay, gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Now, if you really wanted to deploy capital, a pocket which has done very well, right, is pharmaceuticals. At least CDMO companies have come out with a very robust set of numbers, though I can argue that Newland quite hasn't. But what has also been a bit of a spoiler is this whole fear around what could happen if indeed there are tariffs and reciprocal tariffs, and what it could do to the export revenues of some of the Indian pharma companies as well. Let's put all of that into perspective with Vishal Manchanda, Senior VP Institutional Research, Systematic Shares and Stocks. Vishal, good having you. Thank you so much for taking the time out and speaking with us this morning. I want to start off with the big picture, Vishal, because that is what is catching everybody's eye right now. What happens in the case of large tariffs if they come in? What could it mean for some of the US export oriented, dominated Indian pharmaceutical companies? What are your thoughts?
Good morning. So my view is tariffs are highly unlikely on pharma. One, because if you look at the US, they don't have an ecosystem to manufacture pharmaceutical drugs, at least the generic pharmaceutical drugs. They might be manufacturing the high value innovator drugs, but they don't have an infrastructure to do the volumes that is required in generic drugs. So if they impose tariffs, it's going to be inflationary for themselves. So it will do more harm to the US than good. And again, if I look at the cost of manufacturing in the US versus in India, the US would be at least 1.5x more expensive than what it takes to manufacture in India. So if you want to kind of ensure there is a price parity, you either have to put a 50% tariff so that Indian generics are at par with what it takes to manufacture in the US. So I think that's very unlikely. And again, they don't have a manufacturing infrastructure to support the demand that might come in-house for them.
Okay. So you believe that's unlikely. So there is a bit of pullback that we're seeing in pharma stocks. You think it's not out of the fear of this, or is it a misplaced fear because of which the stocks are correcting?
Probably there could be some. I think if at all there a pocket of stocks that can get impacted are the ones probably in the CDMO space, because generally what CDMOs get is business from the innovators. So innovators probably can prefer to outsource more to the US based companies. And in case if these are select tariffs, so they're not imposed across the board. So even if they're imposed across the board, generic companies will continue to export, but they'll export at a higher price. But what can happen to the CDMO companies? Innovators have a choice to shift business from India to probably the US. So there could be some impact in that pocket of the sector.
Got it. Vishal, the other question is specifically, I don't know how many of these stocks come within your coverage, but CDMO. I thought both the performance and the commentary around CDMO from most companies, I mean, even a chemical company like Ami Organics speaking very highly of the CDMO revenues and the opportunity ahead. Now, please tell us what you think of it, because for the longest time, companies have promised here, some have delivered, some have failed to deliver, and now it seems that capacities have gotten created and the future might be bright. Do you think about it in the same fashion? Are you enthused with the performance in the quarter, and are you constructive on the immediate next 4 quarters for the CDMO businesses as well?
Right. So I think if I look at the Indian CDMO space, Indian companies are generally preferred for the high volume work that gets generated in the innovator market. So if I look at companies like Divi's, they have been kind of they're speculating on the GLP-1 demand, and they are actually getting relationship with innovators on the same front. So structurally, if you look at India, it's the right place for companies to manufacture high volume drugs. And if they choose to kind of manufacture these drugs in Europe, probably it would make them very expensive. So India as a destination is very much required. And lately what we are also seeing is we are witnessing an increased demand of high volume drugs because of various new introductions that have come in the market. So I think as far as high volume drugs are concerned, India will remain a preferred destination. What remains to be seen is whether we can also get, as a country, we can also get opportunities on the high value drugs. So basically the oncology drugs, or maybe the formulation manufacturing, sterile formulation manufacturing, and other parts of the value chain in the CDMO space.
Okay. So Vishal, in light of that, but valuations are a bit stiff for a lot of these companies. Where within the CDMO space are you finding favor? What would be the pecking order just within CDMO? I'm not asking you to really broadly talk about the whole healthcare pocket.
So I don't have coverage on the CDMO. as such. But one name that I cover is Jubilant Pharmova. They are a US based CMO, contract manufacturing company. They also have an India presence and they also have a US presence. They are into sterile formulation manufacturing for innovators and generics. And being in the US, they might be better poised than others.
Got it. And in which case, my final question to you, Vishal, if I take the whole healthcare space, I know I have spoken to you only about pharma and CDMO, not about healthcare, which may include diagnostics, hospitals, etc. But if I were to include the whole healthcare space, what would be the pecking order? What would be, let's say, 1, 2, 3, based on the current valuations and your expectations of earnings growth over the next 12 to 24 months?
Yeah. So I think I'll write. So I don't cover diagnostics and hospitals. I just have one diagnostics name under my coverage, Krishna Diagnostics. So that's I think 20-25% compounder on top line. That's going to be the best top line growth story, while the ROEs are yet to kind of come to levels where we would want them to be. They are currently around 8 to 10%. And we would expect them to improve from here, 8 to 10%, maybe 15% over the next 3 to 4 years. On the pharma side, I think I'll focus more on the India focused stories where there is a valuation, where valuations are favorable. But what I can see right now is most of the India focused names are quite rich in valuations. The US is something we need to be cautious about because we might see some pressure on earnings coming from the US from FY27 because of changes in product mix that are anticipated. So I think I'll more focus on India-driven opportunities.
Okay. Thank you so much, Vishal, for joining in right now. And CDMO also in focus. It's definitely in tough markets, it becomes the kind of defensive play. Well, couple of stocks which have no defense right now are iSure and Escorts. Just want to take a look at it again, and iSure definitely feeling the heat. About 4.5% down, actually recovered from the lowest points, but not too much of a reprieve there. Escorts also about 2.5-3% down. Why are both of these counters hurting? It's because of their numbers, and that's why the entire space is in focus. Escorts, Kubota, as well as iSure Motors. Varsha is joining in to give more details.
Thank you, Tamanna. Let me start with iSure, wherein if you see the margins, so the key highlighting point here is margins, which is down due to increased marketing expenses, and also other expenses for the company grew by 70 crore, which includes 20 crore of EV brand launch. Management believe that they can outgrow the motorcycle segment growth in the long term, and they say that they are adding value back to product with brand building growth as the focus for the company. While Bullet and Classic seen good momentum over the last couple of months, and company hasn't increased any pricing, some expenses will continue as per the company. If I were to talk about the con call highlights for the company, so they've showcased electric bus and trucks and new SCV platform iSure Pro X, and also the Hunter 350 have crossed 5 lakh sales mark, and a market share of heavy duty truck is at around 8.9%, and they continue to expand middleweight segment for Royal Enfield, and they believe that they can outgrow the motorcycle segment growth in the long term, and also the discounts level should continue to drop in the CVs as per the management. So these are the basic con call highlights for iSure. Next on my list is Escorts Kubota, wherein if you see the key highlights for the company, overall, though there was a revenue growth of almost 9%, EBITDA growth was only 4%. Margins have taken a hit at 11.4% versus 12% last year, and the net profit is up. Now, if I were to talk about the key highlights for this, their agri machinery segment, the tractor volumes increased 4.5% year on year, but the EBIT margin over here declined to 10.4% from 12% a year ago, and that's the reason we are seeing the decline in margin. While construction equipment segment saw 0.9% year-on-year sales volume, and EBIT margin improved there to 11% from 8% last year. The railway equipment segment, where they have sold this segment though, their revenue declined 2.2% and PAT increased to 32 crore versus 28 crore last year.
Okay, Varsha. Thanks for that. Now, Varsha, stay on. Just before we get to the next management, just very quickly want to mark Zaggle Prepaid. That stock is down another 10% today, 9.5% today, after the 10% slam dunk yesterday. something's gonna miss, whether it's the guidance which points to a very weak Q4 or otherwise, and of course high valuations. And by the way, Tamanna, it's not down on small volumes. 1.27 million shares traded in the first 17 minutes already.
Yeah, this story is something that the street is not, I think, buying, which is, yes, you're adding on more and more customers. Every quarter we see, I think, unending updates on the new customers that are coming, which is great. But the cost of onboarding them and the incentives may be weighing in. That could be one of the many things. But yeah, Zaggle in pain. Varsha is still with us because we're talking about GSFC now, Gujarat State Fertilizer and Chemicals. Before we get to the conversation with the management, Varsha, take us through the Q3 numbers.
Well, thank you, Tamanna, for that. So overall, year on year, the numbers were good, but sequentially, if you see, the numbers are not that good. First, let me just go to the key highlights for the company. So the revenue growth that you're seeing is led by increase in, DAP trading revenues, and the fertilizer output was increased by 23% year on year, and the sales volume have been increased at 25%. The operating efficiencies for the companies had improved marginally, which has led to, marginal increase in the EBITDA margin that we are seeing. And the increased capacity utilization and product mix optimization has contributed to the overall growth. So revenue growth is up 40%, while margins at 5.6% versus 5.3% year on year, and the EBITDA was up 47% and net profit was up 13%. If I were to talk about the outlook, so good harvest is expected for the Rabi crops, and company aims to sell 3 to 3.25 metric tons of volume next quarter.
Okay, S.K. Bajpai, Senior VP Finance and Legal and the CFO of GSFC with us on the show now. Mr. Bajpai, very good morning and thank you for speaking with us. First on NDTV Profit, great to have your point of view on your quarter gone by. It looks like a strong quarter led by the ammonium phosphate trading revenues, but if I look at it sequentially, quarter on quarter, is this up to the mark to what you were expecting, because you had guided for a stronger Q3?
Yeah, because we are happy to inform that we have achieved strong revenue growth, improved efficiency, higher production, along with product mix optimization in Q3 as well as in 9 months of the current financial year. The company achieved this performance despite ongoing external challenges in fertilizer as well as industrial product segments. Top line growth of 40% YOY in Q3 and 6% in 9 months. PBT increased by 16% and PAT increased by 13% YOY in Q3. However, there is more or less same profit before tax, but standalone basis, if you see that there is a little improvement, up by 3% PBT and PAT by 2%. As far as output is concerned, fertilizer output rose by 23% YOY in Q3 and 18% YOY in 9 months. Sales volume is also increased by 25% in Q3, 1.25 lakh metric ton of fertilizers, and 5% in 9 months, that is 75,000 metric ton. As you see the negative cost economics of the DAP, if you manufacture by importing the phosphoric acid and ammonia, it is not cost effective. So we have decided to trade DAP of around 1.25 lakh metric ton of 750 crores of rupees of DAP, and then satisfy the Indian market demand of DAP, because government was also pushing to supply DAP because it is in short supply. And
one minute, Mr. Bajpai, let me understand this, please. So the import rate of rupee, cost of imports and cost of raw materials is an issue. You've just mentioned a solution that you have. Can you explain that?
Yeah, actually P2O5, what is the phosphoric acid requirement for production of the DAP? It the cost, the international prices have risen from $948 per metric ton to $1,060 per metric ton. So the import of phosphoric acid and ammonia at around $450 per metric ton was not a cost economized the production of DAP. So we decided to import the DAP, because the DAP import, the government has announced additional 3,500 rupees per metric ton subsidy, and whatever the loss in relation to the import cost of DAP and the final MRP pricing, that is to be compensated by the government. So in case of import, we were not having any losses import DAP and satisfy the market.
Okay. So it's of course. So those costs are being borne by the government. Give me a sense. Okay, got it. Give me a sense of the subsidy trend. I think in October 24, you got 3,500 per metric ton for DAP as a subsidy. What are the subsidy trends penciled in right now? Because no big bump up in the budget as well for subsidy allocations.
The subsidy allocation is 1,55,000 crores. Annually, the government has just now announced, and it is more or less same or little reduced subsidy total amount decided in the budget. But as I foresee that the subsidy will remain more or less same, the whole factor will be depending upon the international prices of the phosphoric acid and ammonia. In this, just now the ammonia prices has started to slash down a little bit, but still the phosphoric acid prices, as it is at $1,055 per metric ton, only $5 reduction for the quarter 4. So we have to see whether the phosphoric acid and ammonia prices are up to that level when the Indian manufacturers will be really producing the DAP for the Indian fertilizer requirement.
What is the outlook looking like very quickly, sir, for Q4?
Outlook is, the rain is very good, but if we see that the quarter 4 is the lean season for the fertilizer industry, and we have also taken the opportunity to plant shutdown of all our fertilizer plants. So quarter 4 will not be that great as the 9 months of the current financial year. But we hope we are placing our stocks at the field, and we will be relieving our stock positions, and let us see what happens in the quarter 4.
Quarter 4 is one to watch out for. Thank you so much, sir, for speaking with us. That's the management, Mr. Bajpai of GSFC. But the other stock that we are focused on this morning, GSFC stock about 4.5% down, 4% down now. I want to look at Apollo as well. Let's take a look at Apollo Hospitals and what's happening there. Again, numbers which have not enthused the street. They've come up with their Q3 numbers. In fact, my colleague Varsha spoke with Managing Director Sunita Reddy. Here's what she had to say.
So the hospital did quite well. We registered a revenue of 2,785 crores and an EBITDA of 671 crores, which is a 14% growth, and profit improved by 21% to 348 crores. So the numbers were strong. In terms of occupancy, we were at occupancy of 68%. This was led by both ARPOB and by volume. ARPOB grew by 8% and to 60,055 rupees, and as well as volume grew by 5%. So this gave you a growth of 13%.
Now, what is the expectations when it comes to ARPOB, that is average revenue per occupied bed, and occupancy? Because I know that the Q2 is actually the best quarter when it comes to hospital business. You had an occupancy of around 70% last quarter, while it's 68% in the current quarter. What is the expectations going forward?
Oh, I think this is an exceptional quarter because of the holidays that happen. In this quarter, you have Deepavali and you have Christmas. So because of those two festival seasons, occupancy normally declines in the third quarter, but it's already started picking up in quarter 4.
Also, ma'am, let's talk about your segmental wise performance. So, talking about Apollo 24/7, in H1 you did around 1,500 crores of business. In Q3, that is the current quarter, the GMV was around 750 odd crore. I remember last time you had said that you want to take this number to 4,000 crores. So, are you on track?
So GMV is at 760 crores. 11% growth, so it will continue to grow. But the most important thing to remember is that revenue for healthcare was at 2,352 crores. So a growth of 15% on the whole, including pharmacies and digital. And it turned profitable with 32 crores of profit. So we're on track for profitable growth.
Got it. So this 4,000 crores of revenue you'll achieve by when?
Well, I would say 26.
Now about margins, ma'am, for Apollo Healthco, the margins were at 2.4%. Now where do you want to see this margin going forward?
The margin should be around 7%, and this will happen not just now, but over a period of 3 years.
Got it. Now when it comes to Apollo Health and Lifestyle, this quarter you saw a loss of around 8 crore. When are you expecting this segment of yours to be profitable? And EBITDA margins, if I were to see, was at around 9%. So two questions: when are you expecting this segment to turn profitable, and can you see a bump up in margin, because in Q2 EBITDA was around 10%, so quarter on quarter EBITDA margin has gone down?
No, I think the margin you can expect to see 15%. The reason it seemed muted was, because the season was not good. And second, they have got a lot of referral business in this quarter and therefore lower margin. But the revenue was strong at 121 crores. And now with the specialty testing menu, you will see greater margins and also higher revenue. So they have launched a global reference lab. They will next week. And they will become a reference lab for rare diseases, genomics, and everything related to oncology.
Ma'am, so everyone is actually talking about, rather everyone is banking on hospital with brownfield expansions over greenfield. Tell us about your expansion plans. I read that you are on track to add 3,500 capacity beds over the next 5 years. Just wanted to know your expansion plans when it comes to greenfield versus brownfield.
So in terms of, we have to do a combination of both, because as you enter new markets, sometimes you have to do greenfield. But if you look what we are currently doing, expansion in Kolkata is brownfield, existing hospital being modified to suit Apollo and NABH standards. In Hyderabad, again, brownfield, modified building to suit our accreditation standards. And going forward, I think you will see more brownfield, at least 3 to 4 brownfield projects. Pune also is a brownfield where we acquired a hospital with 250 beds, all of these will open in the first quarter of next year.
So considering this greenfield and brownfield capex that you are doing, if you can give us a ballpark range of revenue growth that you are expecting in the next 3 years.
So if you look at currently we're averaging at 15%, and it will continue to grow at 15%. When we add on new capacity, it will move to 20%. 26, 27, we'll start moving closer to 27 to 20%.
And any margin expansion that you are targeting?
So next year we will continue to have some margin expansion. 26, 27 with the opening out of new facilities, I think it will be around 24% EBITDA margin.
Ma'am, what are your expectations for the impact of the Heal in India initiative on your international patients and volume?
So I think it's a combination of what the finance minister announced and the intent from the government to make sure that foreign patients can come to India easily. So part of that is to make sure that the visas, which were very expensive and would take long period to issue, all that process would become cheaper and faster. Second, we do look at better connectivity with our neighboring countries, direct flights coming to our major destinations, which again will improve foreign patients coming to India for healthcare.
Got it. Last question before I let you go. Last time when we spoke, you said that you were thinking in the direction like what Narayana did by entering into insurance business. You said that your company is thinking, on that part, and nothing has been yet decided. So any positive update on that?
Well, I think by next year we will 24/7 will launch insurance broking. So, they have an insurance broking license. They will launch insurance products that will give customers of 24/7 access to good health care.
tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in?
Back with India Market Open right here on NDTV Profit. Now, one of the companies which came out with a rather solid set of numbers was Nalco. Revenues up 39%, EBITDA up 3 times. Margins expand from 23% to 49.9%. And net profit too up 3 times. The stock though has flattened out because the questions would be around what helped in quarter 3, will it continue to help in quarter 4? And the outlook and the quarters to come. Let's pose that question to Mr. Brijendra Pratap Singh, Chairman cum Managing Director of Nalco. Mr. Singh, good having you. Thanks so much for taking the time out, and congrats on a very strong quarter. The street would only, one, what went behind this quarter, and two, are all of those elements intact? Because we do hear, for example, that alumina prices have come off nearly 40% from those. So would the tide for quarter 4 and some of the other quarters be very different than quarter 3?
Good morning, first of all. As far as quarter 4 is concerned, quarter 4, almost whatever alumina export we are doing in quarter 4, the bookings which were done earlier, the prices are almost same as quarter 3. But in the subsequent quarter, after quarter 4, that is next financial year, first quarter, the prices will come down, which is now spot booking going on around $530. So that effect will come in the subsequent quarter. But this quarter, a slight reduction will be there, but not major impact.
Only a slight reduction. Fair call. In which case, sir, are you in a position to be able to tell us that this kind of margin that you've clocked in, right? 49.9% was very, very strong, and congratulations on that. Great work. Is that something, the ballpark range that you might be able to clock in quarter 4?
Quarter 4, again, whatever margins we have gotten, like our EBITDA increase that has been around 161%. Last, if we see 9 months comparison, around 3,000 crores increase in the EBITDA, and around 2,000 crores was due to the revenues, and around 600 due to our raw material prices, and around 500 crores due to saving in our power cost. So this same will continue because our raw material prices remain stable, and the power cost will also remain at the same level, because our power cost will further go down because our captive coal blocks, we are increasing the production of the captive coal blocks. This year we will be doing around 2.5 to 3 million ton. Next year we'll be doing around maybe 4 million ton. So, and the difference between captive coal and the linkage coal or e-auction coal is around 300 to 400 rupees per ton. So that will have an impact of maybe 150 to 200 crores on the our profitability. So as far as our cost is concerned.
Got it, sir. So therefore, just a clarity on the questions that I've asked you, just to get my answers, sir. One, nearly 50% EBITDA margin in quarter 3. You think you can clock in northwards of 40%, 45% EBITDA, 45% EBITDA margin in quarter 4 as well? Part 1 of my question. Sorry.
Will be almost 40%, somewhere around 40% we should be.
40%. Okay, fair call, sir. The second question is, I did hear you say that the alumina price downtick that I spoke about, you mentioned that for quarter 4 it is still almost in range because you've booked previous contracts, etc. But what happens post quarter 4, sir? So because spot prices are down about 40%, is there a commensurate decrease that could come up because of alumina prices correcting so much?
Yes. Post quarter 4, alumina prices, which is the spot booking going on around $530. So that will reduce the EBITDA margins, and the overall revenue, as far as revenue is concerned, that will further reduce. But we will have to accommodate by increasing our captive coal production and reducing our expenditures. That will be the thing by increasing the volumes. Next quarter and next year onwards, we are trying to increase our volumes and reduce the cost. That is the area we'll be concentrating to increase our EBITDA margins.
Mr. Singh, good morning. Tamanna here. Just want to understand in a little more detail what has happened in your chemical segment, because that is, of course, one of the big reasons why we've seen a push in your numbers overall. You have had a 78% uptick in the segment, and the operating profit also gone up from 217 crores year on year to 1,287 crores. Can you just take us through the details of where this push has come from?
This push has basically come up from main thing is the chemical prices, the alumina export prices, which has gone up to around $800 in October, November, and those bookings, spot bookings, which has been done in October, November, still those bookings are continuing. That was one of the major reasons. And the second is the reduction in the raw material prices and reduction in our power fuel cost. These were the three areas in which we have improved. Apart from our revenues generation, we have also improved on our efficiencies, that by reducing our raw material cost and reducing our power and fuel cost.
So on all three of these factors, you talked about how prices, alumina prices went up, but you were using spot prices. You already had spot prices from October, November. That will not sustain, obviously. Because, yeah. Then you talked about raw material prices coming down. What is your outlook on raw material prices directionally? Where do you see them going?
As far as raw material prices are concerned, the CP coke prices was favorable, and our understanding is that this will continue in the coming month and the coming year also. And as far as our power cost is concerned, the power cost will further, will try to reduce the power cost, because power cost is solely dependent on the coal cost and the captive coal. We are increasing the production of the captive coal. Last year we have produced around 2.5 million ton, and next year we'll be producing around 4 million ton. So the captive coal cost of our coal and the cost we used to purchase earlier, the difference is around 400 to 400 rupees per ton. So that will improve our further improve our power and fuel cost.
In terms of the outlook, just trying to understand where you see the outlook in terms of global prices coming in and demand coming in, because right now, Mr. Singh, for your space, for the entire space, the big question is tariffs, right? US is putting in tariffs. India's exposure might not be so much, but what do you think is the impact of all of this geopolitical stress?
As far as this tariff is concerned, which is imposed by US, there can be 2-3 effects, because whatever aluminum was going into the US from 10% increase in tariff to 25%, the aluminum will become costly in the US. And as far as US is concerned, their capacity of aluminum production, which is around 1.2 million ton, they are producing around 0.7 million ton. Many of the smelters are not operating there. So those smelters may come up in maybe next 6 months. So that will increase the production in US, or otherwise, since the aluminum will become costly in the US, the demand may go down in the US. But of course, the aluminum which is going into the US, the surplus aluminum will be available in the other markets, and it will put the pressure on the aluminum in the primary aluminum in the other parts of the world. As far as alumina is concerned, since more and more smelters will be coming up in US, some demand of alumina can increase, because we are not exporting any of the alumina to US. Some demand of additional alumina from US can come.
Got it. Got it. Okay, Mr. Singh, is there any formal guidance that you are ending the year with, or not really?
Guidance in respect of?
For revenues and profitability. You've told me that for Q4 the margins could be about 40%, but cumulatively, you know the 9-month numbers. Are you giving a formal guidance or not really for FY25?
FY25, maybe we will be ending up revenues with around 15,000 crores of maybe the total overall our revenues will be there, maybe slightly plus minus, and EBITDA margin maybe 35 to 40% EBITDA margin will be of trying to end up the year with.
Got it. Well, we will leave it at that, Mr. Singh. Once again, congratulations on a very solid show in Q3. All the best, more importantly for FY26, because FY25 seems to be a rock solid year for you.
Okay, thank you.
Well, that's Nalco. Brijendra Pratap Singh talking about 15,000 crores of revenues, about 35 to 40% EBITDA margin for FY25. You can do your math on the valuations. The stock lying flat. It's not down really, which is quite something because the small cap index again today is down 2.5%. I just want to pull up the small cap index once from the highs. So if you can have the 1 year chart for the small cap, Nifty small cap 250, and from the highs to where it is corrected, this has been a significant correction, right, for the small cap index in a matter of 2.5 months. This entire leap of faith around small caps is getting challenged. Let's wait and watch if this continues. For now, 15,286, down about 2.5% in trade today. There is an important event that will happen too, by the way. The MSCI India standard index rebalancing scheduled for announcement tomorrow has several stocks in focus. And Harsh joins in to tell us which are the ones that should be on your radar. Harsh.
Well, yes, so it's going to be an interesting one because the rebalancing will happen by the 28th of February and therefore flows will start to come through over the next couple of weeks. These are names you should keep your eye out on. One is Hyundai India. You'll see flows of around 13 times average volume. So large flows if this addition comes through and it'll be a fresh addition if at all. In terms of weight ups, the expectations are IndusInd Bank, Varun Beverages, Torrent Pharma, Mankind Pharma and Aurobindo Pharma. The weight ups will likely lead to anything between 2 to 5 times in terms of average daily volume in all of these counters. IndusInd Bank at 5 times, Torrent Pharma at 3 times, the others at 2 times. So some of those also ought to be on your radar. Deletions also likely, but weight downs more importantly. You'll have an Asian Paints and an REC where typical average flow or flows to average daily volume will be around 3 times for Asian Paints and 1 time for REC. And you're seeing a bit of pressure, especially on REC today. Within the small cap index, you'll see 23 additions. Those are expected, and highest flows will be within the following names: Adani Wilmar, Afcons, Brainbees, Ola are the 4 names expected to have the largest flows. 12 deletions, La Opala, DB Corp and Mahindra Logistics among others will also be in focus on the back of this rebalancing. Of course, tomorrow pre-market is when all of this will come through.
Late night today, so that's to be kept in mind. Okay, thanks a lot for that, Harsh. You know what, when we talk about stocks which are not doing well and stocks doing well, on a day like today, we've had a solid performance by Adani Enterprises, Adani Power, Adani Green, Adani Energy. That whole Adani group is done extremely well for itself. So keep one eye out for that. There's some strength in Grasim, of course, that is up about 2. But largely, the top 11 names on the BSE 500 has probably 7 of the Adani Group stocks out there. Add to that Adani Ports and Adani Total as well, which are marginally in the green. So very strong show by that set of stock, by those set of stocks. What's not doing well though? Well, Zaggle Prepaid is now firmly down lower circuit. We spoke about it. It's down 10%. It is now down 10% on a lower circuit. CRISIL is corrected about 8.5%. EIH Hotels is down about 7.5% as well. And there is weakness in Swan Energy as well, which is down about 5.5%.
Well, another set of stocks to look at definitely is United Breweries, because remember the whole hullabaloo with the Telangana government on beer prices, on beverage prices. Well, they seem to have increased it once again, and that's something that we will look at. But some of the other buzzing stocks include Nykaa on the back of their third quarter earnings. What are you tracking this morning, Mahima?
Right, so I'll start with the earnings part, and I'll go with Nykaa first. The stock is seeing an uptick in trade today, and this is on the back of its Q3 numbers. A good set of numbers overall. In terms of the revenue, it grew by around 27%. EBITDA grew by 41%. Margins have increased by a tad bit, that is 63 odd basis points, and net profit was up almost 52% for the company. In terms of its verticals, the beauty segment grew by 32% YOY. Consolidated gross merchandise value is up 25%. 25%. The beauty vertical saw volume growth of 30%. This is also on the back of the festive season, plus the Nykaa Land version and the kind of discounts that have been given by the company. And the Nykaa Fashion also witnessed a revenue growth of 21% YOY. So all of the verticals have grown in double digits, which is why the company has performed well. Now, in terms of Grasim Industries, that's another counter. It's which is kind of facing pressure. Revenue is up 27% for the company, EBITDA down 48%. Margins slid to 3.3% from 8.2%, and net loss of 169 crore was incurred versus a 236 crore of profit. In terms of the key highlights, the cellulosic fibers EBITDA degrew by around 18%. Chemicals EBITDA did see a growth of around 25%, but caustic soda international average spot prices stood higher at 16% YOY. Building materials saw revenue growth of 10%, but EBITDA was down around 14% for the company. Birla Opus, out of 6 plants planned, 4 are already operational, and they've already incurred a capex of 9,015, which is almost 90% of the planned capex. Financial services overall portfolio grew by 27% and AUM grew by 23% YOY. And other businesses EBITDA remained impacted by exceptionally high input cost prices. This is because of the linen segment, and renewable business cumulative installed capacity was up 37% for the company. Now, coming to United Breweries, as you rightly mentioned, a lot was happening with respect to the Telangana government. The company did stop its supply of beer. Then it also resumed back, saying that they are in a conversation with the Telangana government. Now there's a follow-up on that. Beer prices in Telangana have been hiked by 15% from February 11th. They're assuming that assuming that there is no excise increase, MRP increases for consumers shall be modest 3 to 4%, and it shouldn't impact the overall industry volumes. But Telangana is a overall 55 million case industry, out of which UBL alone does 38 to 39 million cases, which is almost 70% of their of the total Telangana market share. In terms of price increase, this shall lead to a boost of around 1.7 to 1.9 billion EBITDA for UBL, and the amount of incremental EBITDA for FY25 estimates will be around 18 to 20% and this could lead to a 200 to 220 basis points EBITDA margin increase as well. Now, Telangana has been EBITDA negative state for UBL, and this could possibly turn. So
All
this
right.
is the overall outlook.
Thank you for that, Mahima. No cheer yet to UB despite that. In fact, the market overall is finding it very difficult to find reasons to cheer. And what is the worry here? What is the worry? What should be the outlook? To speak on this, I'm joined now by Sridhar Sivaram, Investment Director, Enam Holdings. Sridhar, so great to have you in our studios.
Thanks for inviting me.
Yeah, I'm going to start, I think, by talking about the biggest chatter point right now, which is recent comments by a very well-respected fund manager at a very high level, talking about how time to, I'm paraphrasing here, but time to lock, stock and barrel, bolt from small and mid-cap funds. And you're seeing that pain point continue. I'm sure this has been a constant talk point or conversation point. Just wondering what you thought about it.
So if you see, when I came here 3 months back, that was something which we also had highlighted, that the large caps looked far better from a valuation standpoint than the mid caps. And there was so much of flows coming into mid caps. Thanks to SIPs coming predominantly to the small and mid caps, then all the PMS money which also flows into that particular segment. So obviously there was some irrational exuberance there. We are seeing some of that getting corrected now, maybe some more for that over the next few months, because not all the earnings have been the way people would have expected. Some earnings have been good, but the expectations were so high that the stocks are correcting very significantly. We think it may continue for another 3 months possibly, and then earnings will catch up. We have some macro issues globally also and in India. So the markets are not in the best mood right now. That's how I would put. So you need some excuse for some of these irrational exuberance to go. We got some excuses right now.
This is interesting. Yesterday, Samir Arora said markets are sulking. Today, you've said markets are not in the best mood right now. But what you've said about mid and small caps is a bit of a, I would say, nuanced or tempered view, hinged only on valuations. Valuations have come down. Valuations have come down, but that's not solving the problem or the outlook, isn't it?
See, at the end of the day, what you pay for a company is the earnings growth of the future of the company.
Right.
Now, if the starting point valuation is very high, it could easily be possible that you may not make any money for say 2 years, 3 years. Still, there is sanity in the earnings growth. So if the earnings growth continue, so like it's not like we are bearish on all the mid and small cap. There are pockets where we think stocks have corrected and we think that earnings growth is looking very good. We are jumping in. So it's not like, and I'm sure it's the same for the fund manager whom you mentioned, that it's not, there are 5,000 stocks listed here. Yeah. So it can't be that all of them have the same issue. That's the job of the fund manager to find a deep value. When markets correct like this, the good, bad, ugly, everything corrects. So it's the job of us to figure out the good and to stay away from the bad and ugly.
Sridhar, good morning, of course. And you reckon that, I heard you say in your opening answer that there is still some more to go. You reckon the good, bad, ugly, all of them, because of the falling tide, will see some corrective moves over the next, of that ensuing period?
So I think a larger part of the issue, I would say for emerging markets, because India is part of emerging markets, will come from the policies of the US. And we're already seeing that. I think the problem for India in particular will come from the currency market. We are seeing Reserve Bank defending the currency, yesterday, and I am assuming today also. But they will not be able to do it for too long. And if this tariff policies of US continue like this, we will see emerging market currencies depreciate, which would mean that at some point Reserve Bank would have to change their stance and raise interest rates, because that's how you defend currencies. So I was very surprised that the Reserve Bank went on to cut interest rates at a time when the entire emerging market currency is in a flux and possibly will be in a flux for another 3 months. If I was in their shoes, I would have waited for 3 months. Liquidity is something which the entire banking community is asking for. I'm happy they're doing that. 25 basis points interest rates cut doesn't matter either way. But it look so difficult for them if they have to change their stance because they're trying to defend the currency. I don't know what happens there, okay? But I'm just saying that if China were to depreciate the currency by 4-5% because of the tariffs, because we are seeing tariff news every day.
How can India defend the rupee then?
Exactly. So you will have to change your interest rate stance.
No, but you can't defend the rupee, right? Because if you try and defend the rupee, then your exports take a hit, Sridhar.
So you cannot manage all of it, right?
Right.
So at some point, if your interest rate differential is so high, then the only way you can help stem the flow, stem the currency depreciation is by increasing rates. So it's a very tough task that Reserve Bank has. Only time will say how this happens. Obviously, a currency will depreciate. What RBI wants is an orderly depreciation, which often doesn't happen when there is a flux in the emerging market, currency market, which I anticipate in the next 3 months, we'll see a few of them. So that's the challenge, that a lot of the problems or the macro issues will come not particularly from India, but it comes from the US policies, and they're very uncertain in the next 3 months. That's how I would put it.
Noted. Okay, Sridhar, so therefore, I'm guessing that while you're finding some positives in results of companies which now, because of the correction, might be trading at half decent or decent valuations, it might not still be time to go out and buy if they belong to the mid cap and the small cap bucket, because the tide itself might even carry the good boats a bit lower. So even if you're buying, I'm presuming you're staggering out your purchases.
Yeah, so exactly. So you don't know how the markets behave, and if you think this is in your zone where you like the valuation, then you buy it over a period. And in this market, the markets like this, your price does come. Yeah. So if you think I want to buy at X price, you see that price has already come. Then you say, okay, I'll buy some, then I'll look for a lower price. So we've seen such markets in the past also. So this is nothing new. I started my my investing journey in '94, and '94 to '99 was bear market. In fact, '99 I would extend it to 2003. Almost 10 years was a bear market, excepting for one year of a bull market in the technology space.
Right.
So we've seen markets like this. Unfortunately, a lot of the newer fund managers are yet to see this.
I was just going to come to that point. You've been seasoned and have seen the worst. Newer fund managers haven't. Newer investors haven't.
Yeah.
And the SIP investors is what is keeping everything afloat. I'm just wondering if that is a fear factor that the market needs to price in. What happens if SIP investors are put off with this whole mid-small cap returns, not just the fear or some statement, but the actual returns that they see?
So we've seen some corrections in the past, if you take the last 3-4 years, but the domestic investors have continued putting money in SIP. We'll know in the next 2-3 months how this is playing out. I think the SIP flows are making a big difference in reducing the volatility in the Indian markets. Because my view is that FII selling will continue, because emerging market asset class, which I have spoken many times, is a dying asset class. So we will see outflows from this asset class, not because people are selling India, because they are selling emerging markets as an asset class, which hasn't given returns for over 10 years. 20-year returns are like 2-3%.
But India was the exception.
India, Taiwan, there are two large markets which have given returns. So barring these two, the rest is all a basket case. So why would anybody want to invest in an asset class when the US markets are giving such good returns? The US debt is giving such good returns. So when a pension fund is allocating money to emerging markets, they are looking at a disproportionate return over the US markets, which is not the case. I mean, you haven't got returns for 10 years. The 20-year returns are 2%. Doesn't make any sense to invest in this asset class, is my view. And that's what we are seeing, that you're seeing continuous redemption. When I speak to my ex-colleagues, in New York, they say they continue to see redemptions in there. And money is also flowing from active to passive, which is the other thing. That why would you want to pay, 75 basis points to an active manager? He can't even outperform the benchmark. I'd rather put money in passive. So you have two issues which are playing out here. I mean, the broad answer to your question is that domestic flows are making a big difference, and we hope that this continues. The day this starts to taper, we'll have some challenges.
Do you think it could?
I think it will. I mean, the pace of flow will surely taper. I mean, we are getting almost 30,000-40,000 crores a month if you take all the funds together.
Yeah.
I think that number will surely come down. Even if it is half, it's still good. I mean, it's still positive, right? That money has to be put into the market. But let's see. I mean, it's difficult to take a guess on that. And I'm not the expert on mutual fund industry flows. But I'm keeping my fingers crossed. I hope that flows continue for the betterment of our markets.
Actually, that's what I was going to invert the question, Sridhar. Long history, Indian markets, and various ways to slice the data, but long history, Indian markets have given good returns. Is this the time when the SIP investor should rather not stop the inflows, because you're getting at decent valuations relative to 26,200? It may get a bit better, of course, but are you, let's say, with a 3-year view on India, 5 years too long, 3-year view, constructive on the potential returns from Indian markets currently?
I am.
You are?
Yeah, so personally also I'm putting money. I mean, you may debate on what type of stocks you are putting money into, but I mean, that's my broad view, that the market's going through a cyclical issue, some domestic issues, some global issues, which always happens. Markets are not linear. I mean, they don't go one way. So these are the challenges you face in a market over the years, and over a period of time, you will see positive returns. If the earnings growth are strong, it will reflect in the stock price at some point or the other. Obviously, there are times when, there are certain issues, markets are nervous. Those are time to, add, buy if you are convinced. If not, stay on the sideline. But over a period, I think we will do.
Okay.
We will do similar returns that we have done, say, in the past 5 years or the past 10 years. I mean, the Nifty returns 20 years is around 13%.
Right.
I doubt if we will not give the same return for the next 10 or 20 years, which is roughly 12-13% return. If you're expecting 20%, 30% returns,
वो नहीं होगा, चलो ठीक है.
वो नहीं होगा, वो पहले भी नहीं हुआ. That will not happen. if you're reasonable, then there is enough and more opportunities in the market.
So the guy or the lady who's invested in banking stocks, right, over the last 2-3 years, saying that there is maybe half decent earnings growth in select pockets, valuations have been reasonable, hasn't quite seen gains. Now I'm trying to get to the nitty-gritties, right? Do you reckon banking is an attractive pocket because it is large caps, it is showing earnings, balance sheets are clean, etc.? Or are you looking at, are you not necessarily that gung-ho on banking?
So if I look at the bank stocks that we invested in the last 3 years,
PSUs,
they gave us very good returns.
Yeah, that's true.
So I'm not complaining right now, okay? But I'm not saying that we are not invested in the private sector, but I'm just giving you an example. So it will be unfair to, say that you invested in a banking fund. It's better, which if somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap, because that's how returns will be over a long period of time. If that is what is being done, then most fund managers are smart enough to figure out the portfolio within that. Now, if you go into specific banking funds or say a PSU fund or say a defense fund, those are dangerous territories.
So thematic funds are a problem.
So those are, and they typically come at the peak of the theme.
Yeah.
And that's what we saw. I mean, we've discussed this before. Then when we invested in the PSU fund in 21, the fund size was 800 crores in one of the fund. And we told the fund manager, you should be marketing this fund. And then they launched a new fund when the theme was almost over. And then we were exiting from there.
So the
I'm
cycle,
like, so that's what happens, no?
Okay, for people watching this, of course, those who have mutual fund investments are going to go that way. But looking at where the opportunities lie, are the opportunities lying in your large cap stocks, even after the kind of quarterly numbers we've seen? Just your take on Q3 as well.
I think large cap looks reasonably good. And they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. It is not a norm that every year markets have to give positive returns. That's not how it is. So investors have to learn that there can be years where you get negative returns. It could easily be 25 because we have so many question marks. As I said, not coming mostly from India, coming from outside India, which we have no control on.
Last question from mine at least. If the Indian scenario looks okay, which means that Q4 the cyclical bounce back happens, the government capex steps up. I mean, it's on record that they have to spend this much. So let's assume all of that happens, and then the spending happens as is. Is the boost that the government has given on consumption, etc., is there raising hopes for at least a better performance on the economic front? There might also be the base effect at play, and could that help stock sentiment?
So I'm not sure of Q4. First of all, this 1 lakh will not happen. It's not happening in Q4.
No.
It may not happen in Q1 and Q2 also. Keep in mind that this is salary, which comes every month. A large part of it will come in the second half, which is every month it comes. And you and me are also beneficiary of this. I'm not complaining right now, but the point is that, of all the 3 crore taxpayers are beneficiaries in some form or the other of the tax benefit. Will I boost consumption? Maybe not. But maybe the 75 lakh who are at the below 12 lakhs, they will benefit. So it will happen, but again, capex, we've seen it's a constraint. I mean, there is only that much that the government can do. I'm a bit worried on this, this Ladli Behan type schemes now becoming a norm for every state. Delhi had it, now you'll have Bihar, you'll have UP elections coming up. What we hear is states don't have money for capex from infra companies, and they are very worried because they're not getting their dues. Those are worrying signs. So I'm not saying that, everything is perfect, from Q4 onwards, earnings goes up. I think the earnings also have cycles. So we will see some challenges in Q4 also. I think the second half of next financial year looks better. That's how I would put it.
Okay, so brace in for at least another couple of quarters.
Yes.
2 or if not 3. So thank you so much, Sridhar,
Thanks
for speaking with us today and giving us all your insights on what is turning out to be maybe a tough year. It's okay if 2025 doesn't give positive returns. It happens. As someone who's been, cut his teeth at the start of a bear market. All right, let's move on to an important story. US President Donald Trump, in an executive order signed on Monday, paused enforcement of a federal law, the Foreign Corrupt Practices Act, FCPA. Somi joins in to tell us more on this and why this is important.
Well, if you see, the US President Donald Trump has signed an executive order directing the Department of Justice to pause enforcing FCPA. Now, FCPA is the Foreign Corrupt Practice Act, which became a law in 1977, barring all Americans and certain foreign issuers of securities from paying bribes to foreign officials. Now, this law was amended in 1998 to also apply to foreign firms and people who cause such bribes to take place within the United States as well. Now, as per the US President, this move is going to mean a lot more business for America going forward, and he also said that this act sounds good on paper, but in practice it's a disaster. The US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices which are quite common by international competitors, and this not enforcing this act will make an even playing field for US companies in foreign field also, as per the president. Now, last year the US Department of Justice had also accused Adani officials of perpetrating a bribery scheme. Now, Adani Group had called these accusations baseless as they were not charged under FCPA, but now, given the fact that the US President has paused enforcing this act, it will mean that the earlier Biden regime or Biden administration who had charged Adani Group officials with the bribery act will not be applicable, given the fact that now the current president has put a pause on this FCPA, which is the Foreign Corrupt Practice Act.
All right, thank you for that, Somit. So that's important and perhaps explains the trend that we're seeing in Adani Group stocks this morning as well. Remember that one of the charges that the Department of Justice had brought was under this particular act, which Donald Trump now in an executive order has scrapped. That's why you're seeing Adani end about 3.5% up. We should look at Adani Green also very quickly, about 1.5% up in an otherwise weak market. With that, it's a wrap on India Market Open, but stay tuned. Ask Profit is up next.
new tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide?
Welcome back. You're watching Ask Profit, a show where we get all your stock-related queries answered, whether they're fundamental or technical. We have our next caller lined up. Swaminathan from Bengaluru is calling in. Swaminathan, a very good morning to you. How can we help you?
Yeah, good morning. My question is regarding Apollo Hospitals.
Okay.
And I'm holding around 14 shares at 6,900 rupees each.
Okay.
And I saw that quarterly report, which seems to be better, and whereas the market is going down at today, it is less than 4% actually.
Right.
And is it because of the market momentum or Adani Mayo Clinic, new amalgamations and everything. I just wanted to know how the Apollo Hospitals in the medium term to long term.
Got it. Asta, I'll come to you again for this one. As Swaminathan rightly mentioned, that the numbers were not bad. In terms of the Q3 performance, the overall higher occupancy was what kind of drove the revenue. There was a volume uptick as well. Overall, also we're seeing an uptick in volumes as well as EBITDA margins also expanded. But is it just the market sentiment that's pulling down the stock? And overall, what's the view with respect to Apollo Hospitals?
So they have around 6,360 operating stores. I think so. Number of stores are good. In fact, it is one of the largest pharmacy platform in India. But now what I believe that despite posting strong numbers, in fact, they have given the rise in the EBITDA margin also, and everything was positive, the stock is falling. So since the investor is in profit right now, because here the cost price, can you just tell me the cost price? Actually, it just skipped out of my mind. What is the cost price at which the shares are bought for this counter?
Right. So it's trading the cost price at which Swaminathan bought it, or the current trading price?
Yeah, cost price.
So it's at 6,900. Yes, 6,900 is the cost price at which it's bought it.
Yes. So, Mr. Swaminathan, you have to wait for a long, because what we believe that markets are still not giving any chance the stock prices to move up despite posting strong numbers. Maybe the strong results were already discounted and now the high valuations are becoming concern. So I think that is why we are seeing the downside momentum in the stock price. So idea here is, if you can take risk, then hold this counter, or because this counter is poised for some more downside from here. This is what I believe. So here, your investment horizon should be more than 6 months. And then I think, again, you can see your stock prices going above your cost price of 6,900. So idea here is to stay invested, keep patience, because I think this stock can fall more from here. But in a longer term, definitely the kind of fundamentals this company is having, I think there is no issue. So rather than booking losses or exiting at this point of a time, better to stay invested in this counter for a longer run, where the time horizon can lie between 6 months to 9 months.
All right, so that's the view coming in on Apollo Hospitals. The next counter that we're talking about is Galaxy Surfactants. Prakash from Chennai is a long-term investor and he's been holding Galaxy Surfactants, 72 shares bought at 2,802 a piece since 2 years. He wants to know whether the stock has any scope to generate, further returns is what he's asking. Swati, on the charts, how does it look? How is it faring in terms of results? I'm seeing that the net profit was down by about 9.5%, but revenue did grow by 10% and margins have taken a hit this quarter.
On the technical front, Mahima, we have already seen a lot of correction in this particular counter from almost 3,300s to now 2,200 levels. Now, on the shorter term degree, daily charts, the stock is forming the inverse head and shoulder formations, which is bullish formations. Whenever we see such kind of a correction at the low bottom, if we find out such kind of a formations, definitely we believe that in the near terms, we likely to witness very strong momentum rally on the upside. Now, at the current level, the stock is forming the right shoulder of that particular head and shoulder pattern, the inverse head and shoulder pattern. Downside, it has a very good support of 2350 provided by the shoulder support. Neckline comes to at around 2470. So we are preempting the breakout. If the stock manages to give the breakout of 2470 levels on the high side, then one side we can witness a very good rally up to at least 2650 levels. So I believe one should definitely hold on these particular positions on the longer term duration or the shorter term duration. Initial targets will be at 2650. Beyond that level, 2700, 2800 levels can be seen. So it's a hold from my end.
All right, so that's the view coming on Galaxy Surfactants. But let's also again go back to India Energy Week 2025 as it's kicking off at Yashobhoomi, Dwarka, New Delhi. The summit will see participation from a slew of ministers, CEOs and industry leaders. And let's cut across to our Petroleum and Natural Gas Minister, Hardeep Singh Puri, who's
major
addressing
geopolitical shifts. It is in this context that I believe that the India Energy Week provides a unique platform for all of us in the industry to reflect and introspect, to catch up with each other, not just formally as business-to-business transactions are undertaken, but also informally for policymakers and stakeholders to understand what other nations are thinking of and what we can do together. We have here a representation that captures both the urgency of the moment and the excitement of the unfolding India story. The India Energy Week has emerged to become, if I may be allowed to say, the second largest energy event in only its third year. More than 70,000 energy professionals from over 50 countries will be participating in this event. I am pleased that the event will see participation from more than 20 energy and other ministers, including their deputies, from important stakeholders such as Qatar, UK, Russia, Brazil, Tanzania and Venezuela, to name only a few. Equally, the private sector and the global advisory and regulatory architecture are well represented. I welcome members and executives of international organizations such as OPEC, and I see my brother, the Secretary General here, IEF and IEA, as well as nearly 100 CEOs from Fortune 500 energy companies such as Honeywell, Petrobras, Technip Energies, ADNOC, Baker Hughes, Vitol, and many more. The fact that this is the first time this year that senior representatives from across the global energy sector will exchange notes is crucial. That is the true value of this week. It enables us to listen and learn from one another, to think together of the mega trends that will shape the future. It is our hope that the India Energy Week provides the much needed network effects which can foster constructive dialogue. But this platform, ladies and gentlemen, is not just a strategic conference. Beyond industry and technology, IEW is also about youth and innovation. More than 500 entrepreneurs are participating in startup challenges like Avinya and Vasudha, thus nurturing the next generation of energy disruptors. It is also an exhibition forum where cutting-edge innovations will be showcased by more than 700 exhibiting companies, more than 100 of which are exciting startups. I am overwhelmed to see the scale, depth and size of innovation, particularly in deep tech in the energy sector, such as artificial intelligence, machine learning, quantum computing, big data, drones and robotics. In many ways, harnessing the burgeoning innovation ecosystem, most notably in India, was a primary factor behind the inception of the first edition of the India Energy Week in 2023. Major oil and gas companies such as BP, Shell, Exxon, Chevron, McDermott have their global capability centers in India, where lakhs of a lakh being 100,000, Indian engineers are doing cutting-edge design, engineering, data processing and decision analytics for drilling operations, refinery operations and seismic data processing globally. The aim was and remains to establish India as the epicenter for new age technologies in this sector. In the past two editions, we witnessed notable innovations such as crude oil tank sludge cleaning, industrial biotechnology applications in upstream and downstream, eco-friendly batteries, remotely operated underwater vehicles and new electrolyzer technologies light up the event. Capturing the benefit of these innovations is not just necessary for the imminent transition, but also to protect our national interests. Nobody can say with any degree of certainty what the new framework for global energy markets will look like, but we can be sure that it is going to be transforming at breakneck speed, driven by forces that are both accelerating and colliding. What we see today is a recalibration of strategy, prioritizing near-term profitability while keeping long-term transitions efforts in play. Before anyone accuses me of ignoring our environmental obligations, I must state that the primary focus remains on increasing the adoption of biofuels, renewables and hydrogen. The IEA estimated that global energy investment was going to exceed $3 trillion for the first time in 2024, with $2 trillion going to clean energy, technologies and infrastructure. Climate change is no longer a looming threat. It is already here. It is unfolding in many grave disasters, wildfires, floods, and record-breaking temperatures are clear reminders that the world is running out of time. I am a student of history. When I look back at the evolution of global energy economics, I recognize that the very notion of energy transition requires a very deep and nuanced understanding. It is not outright replacement, but more shifting the primacy of one energy source over another. This transition isn't about eliminating hydrocarbons overnight, but leveraging them strategically while scaling renewables to mitigate emissions. For too long, we have framed energy transition as a linear journey, from fossil fuels to renewables, from past to future, from problems to solution. But what if this logic is not feasible? Even when renewables become the dominant energy sources, oil and gas will continue to play an important, if not pivotal role, not just in power generation, but in stabilizing grids, industrial hydrogen, and energy storage innovation. One thing has become absolutely clear to all stakeholders. Energy justice must remain at the core of the imminent transformation. A fragmented transition risks deepening inequality, leaving billions without reliable energy, while wealthier nations surge ahead. If the transition is not just, it will not succeed, because the political economy will not allow it. There are three forces, in my view, that will play a pivotal role in shaping the energy landscape in the coming years. Artificial intelligence and clean cooking are emerging as major energy demand drivers, each shaping the future of economies and societies. AI is one of the largest energy consumers, with data center demand rising 18 to 20% annually by 2030. India's AI-driven digital economy, projected to reach $400 billion by 2030, presents both a challenge and an opportunity. The real question is not how we will meet this surge in demand, but how we will do so without destabilizing grids or derailing climate commitments. Renewables alone won't be enough. AI-driven demand requires round-the-clock reliability, meaning natural gas, coal with carbon abatement, and next-generation nuclear will remain essential. But the potential benefits are immense. AI itself will enhance fossil fuel efficiency, reshaping the energy equation where intelligence, not just resources, dictates energy security. The next great leap will come from dismantling the idea of centralized energy in the form of AI-driven grids that predict demand before it happens. On the other hand, expanding clean cooking gas access requires a multi-fuel strategy, scaling traditional LPG, augmenting bio-CNG, accelerating electrification, and challenging investments into areas such as integration, decentralized renewables like wind power and microgrids to support electric and induction cooking. The challenge is not technology, but scaling access equitably. India has achieved 100% clean cooking access through the Pradhan Mantri Ujjwala Yojana, city gas expansion, and solar cooking pilots, proving that policy-driven solutions can transform lives. The answer to energy transition lies in strategic investments across hydrocarbons and renewables. The future lies in smart capital reallocation, for instance, deploying wind and solar where intermittency is manageable, biofuels where liquid fuel demand persists, and gas where firm power is essential. That is how we assure both affordability and decarbonization. India presents a compelling and diversified investment landscape. 7.6 billion tons of discovered upstream resources, 500 million tons of biofuel food feedstock, and rising energy demand. At the same time, it is scaling renewables, targeting 5 million metric tons of hydrogen by 2030, $96 billion in hydrogen investments, and a gas share increase from 6 to 15% alongside a $30 billion in refining and petrochemical expansion. Third, resilient supply chains for an orderly transition. Supply disruptions, whether in lithium for storage, nickel for EVs, or semiconductors for AI-driven grids, must not create winners and losers in the transition. Without intervention, the growing gap in energy technology access could leave developing economies locked out of the transition. Governments and industries must act decisively to prevent disorderly shifts. Policy cannot remain While the world accelerates, governments must craft frameworks that incentivize bold innovation, de-risk essential investment, and ensure commitments beyond the short term. Success will be measured, I submit, not by how fast the wealthiest decarbonize, but how inclusively the world transforms. This third edition of India Energy Week becomes the definitive platform for shaping the energy agenda of the future. This is where transformative partnerships will hopefully take place and take shape, where game-changing technologies are unveiled and the future of energy is written.
All right, that was Hardeep Singh Puri addressing the India Energy Week 2025 and addressing as to how different forms of energies are shaping up and how they'll form, a future, form its future in India going ahead in 2030 as well. Let's move on to our next caller. Pradeep from Kerala is calling in. Pradeep, a very good morning to you. I believe you have a query on HPL engine.
Hi, good morning.
Good morning.
Yeah, I'm just looking HPL engine. I'm holding just 10 shares for a sample, and I don't know, it's the right time to buy like a 2,000 or 1,000 share.
Okay. Are you talking about HBL engine or HBL engineering?
HBL engine.
Engines, okay. And you are looking to make a fresh entry, if I'm not wrong, Pradeep, right?
No, actually, I bought already like 10 shares.
Okay.
And I don't know, this is the right time to buy more shares,
Okay.
like a little large quantity.
Okay. All right.
It's a HBL power system.
HPL Power Systems, got it. So that's HPL Engineering. So Ati, on the charts, HPL Power Systems, which was, kind of incorporated long back ago in 1983, he's already holding 10 shares and he wants to accumulate more. Is this the right entry point to enter the counter?
Maybe not at all. This is not the right time to average it out or write down to the fresh positions, because as of now, on a larger degree, the stock has forming the negative divergence, and that's why we are witnessing a continuous sell-off in this particular stocks. Downside, it might find a support nearby 420, 410 levels. Up to that level, it can fall down this particular counter because it's on the verge of entering the oversold zone. So downside is more as current from the current levels. So whenever the stocks find out a support nearby the 420 or 400 in particular that zone, at point of time you can again review this particular counter and we will give the buy call on that particular levels, but not at the current market price. We should hold on because more selling pressure is likely to be seen into this particular stock.
All right. So no fresh entry at the current levels for HPL Power Systems. The next query that we have is from Vamsi, who's from Andhra Pradesh. She's holding 5 shares of Keynes Technology at an average price of 4106 per share. She wants to know whether she should keep holding it or average them at a lower level. Swati, on the charts, is that the right strategy to adopt?
It's a right strategy to adopt in order to take your buying price on a lower level, but this particular stock is not showing any sign of a formation supports at the current levels. More downfall can be seen into this particular counter, which might take stocks towards at least 3700 levels on the downside. So wait for that particular levels. Let the stock settle down at 3600 or 3700 in that period of time, but just to avoid a long position at the current market price, if it shows any kind of a reversal from the support levels, then we can take a long position, but not at the current market price.
All right. Bikaji Foods is the next counter. Meenu from Trivandrum is holding about 10 shares. She bought it 8 months back at a price of 700 odd rupees. She's sitting on a loss of 900 odd rupees, and she wants to know whether she should keep holding it from a longer term perspective or not. I'll come to you, Astha, for this one. In terms of the Q3 numbers, they were not very impressive. You know, the palm oil prices have gone up for the company, which is why there was a hit on the margins as well as the net profit overall, and EBITDA also did not fare very well. And this was, including their PLI revenue also. Ex-PLI revenue was even lower. Your view with respect to Bikaji from a longer term perspective?
So I think in the Western snack segment, the growth was not very impressive. It was a flat growth, which we have seen because there are 2-3 segments. First of all, ethnic segment, then Western snacks and packaged food segment. And in fact, their papad business was also, has shown a single digit growth. So now the growth has started, tapering off, because we have seen in the past the growth was higher than what they have posted in the last quarter. So I think, and on the back of muted growth, the valuations now looks to be expensive. So this is the major reason we are seeing that stock prices are also falling towards southwards direction. So idea here is to not to make a new entry into this counter, and only 10, I mean the quantity is 10, the number of shares which are held by the investors. So rather than booking losses at this point of a time, since the quantity is not high, my idea here is to stay invested and keep a close eye on the numbers which will be coming going forward. So right now, just hold this counter, keeping in mind the time horizon should be more than 3 to 6 months.
All right, hold is the view coming in. If the time horizon is between 3 to 6 months, and not between 3 to 6 months, in fact, over 3 to 6 months, the stock is down 5% as we speak. The next caller that we have is Charan, who's from Bengaluru. Charan, a very good morning to you. How can we help you? Charan, I can hear you. You can go ahead with your query. Okay, I think we've lost him. We've lost his line. Let's take the next query. That is PFC. Pankaj Pitroda has a query on PFC. He's holding 1300 odd shares and he's bought it at 413 a piece. He wants a long-term view on this particular counter. Astha, your view with respect to PFC?
So long-term view is always positive for this counter. In the shorter term, maybe some pain can be seen, but in the longer term, I think the disbursement which the company is doing, they can accelerate further. In fact, I think in the coming quarter, that is Q4, we are expecting disbursement to get accelerated. In fact, if I talk about their asset quality also, so asset quality in the past was showing some sort of improvements. So I think on the back of this, a good long-term story to bet upon on the back of the industry tailwind which this company is enjoying. But in the shorter term, as the markets are volatile in the southwards direction, so maybe the stock can see some more pressure from here. But for the longer term, remain invested in this counter.
From a longer term, remain invested in PFC is the view coming in from Astha. Now it's time for the rapid fire segment on Ask Profit. Astha and Swati, you both are aware of the format. Keep your answers as short as possible. And we'll start with the first query. NTPC Green is the counter. Astha, hold or sell?
Hold. NTPC is looking, green is looking good to us. Hold for the price target of 150 to 120.
Okay, Siemens is the next counter. Vishaka from Bengaluru wants to know whether this is the right time to enter or not. Swati, on the charts?
Not at the current levels. Any momentum below towards 5100 so level, you can definitely take a long position.
All right, Idea Forge is the next counter. We don't have the viewer's name, but 200 shares bought an average price of 611. Should he hold them or book losses or consider averaging out the investment at current levels? Swati, on the charts?
Not to book the losses, hold for a time period of time. I believe where a downside it can be, you can average it out between 350 to 300 levels.
All right, Gul is holding REC shares bought at 465 a piece. Is this the right time to add more? Astha, from a longer term view, what's the view for REC?
So add more, but not at this point of a time. Maybe the dips at around 390 odd levels or 395 is the right point to make entry into this company.
All right. Salman Chaudhary is asking about Anant Raj. He's bought 200 at a price of. He's bought 200 shares at a stock price of 600. Can he buy more at the current levels, considering the stock is tanking so much? Asa, with respect to the fundamentals, what do you suggest?
So fundamental seems to be strong. 64% was a rise in their bottom line. But looking after the market condition, it's better to wait for making, more addition in this counter. Maybe at around 570 or 565 odd levels, this counter is looking lucrative to make an entry.
Okay, Vodafone Idea is the next counter. 30,000 shares bought at 9.6 a piece from a 2 months perspective. Swati, what should he do?
He can hold on the long positions for a shorter term perspective. 8.4 will be act as a very strong support level. So by keeping that stop loss, you can hold on. Upside, if the stock comes down at 10 or 10.50, you can book your profits.
All right. Well, thank you so much, both Astha and Swati, for taking out time and giving us all of those insights on Ask Profit. Thank you so much for all of your views. With that, we're completely out of time on this edition of Ask Profit. But stay tuned to NDTV Profit for more news and updates on the other side.
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome. You're watching Markets at 12. I'm Harsh Saita. Let's take a look at where markets are at this point. There's quite a bit of pressure on Indian indices. You are seeing around 0.5% plus in terms of a cut on the Nifty 50. While global cues were largely positive, we're seeing a lot of pressure, at least where the broader markets are concerned. We're at the day's low on the Nifty. Before I turn it across and look at some of the sectoral indices, look at the mid cap, 2.5% lower now and bleeding hard. You're looking at the small cap index, which is down nearly 3% plus. We're just at the day's lows, in fact, where the small cap index is concerned. So clear pressure across the board. Let's look at the contributors on the Nifty 50. What you'll see is the heavyweights leading the losses. And quite a bit of pressure in that sense. You're looking at HDFC, Infi, Bajaj Finance, which has been a rank outperformer also among the top contributors on the negative side. Positive, far and few, frankly. Some names which are standing out even on the positives. But you're looking at a very, very weak and a very difficult market. Let's pull up the market breadth, and if you can have the line chart intraday, that gives us perspective. There you go, just extremely weak in terms of breadth, and this is following the day that we've had yesterday as well, where the breadth was again very, very difficult, and that continues. That's another day where we're seeing some amount of shave off in terms of valuations. Let's look at sectors now. Actually, 1% lower on the Nifty Bank, nearly 1.3% lower on the Nifty Auto. The FMCG index also down around 1.3 odd percent. Metals, though, not as bad as yesterday, but we've seen a very strong cut yesterday, 2.5% plus. Now we're seeing another 0.5% lower on the Nifty Metal Index as well. So some of those really coming under pressure. The pharma index is down 1.4 odd percent as well. The realty index, second consecutive day, 3+% lower. So those are some sectors as well where there's plenty of pressure. No sector in the green at this point. The India VIX also largely in the red is what we're seeing at this point. So, well, plenty of, okay, just about in the green, frankly. So flattish on the India VIX, but the sharp spike that we saw yesterday on the VIX doesn't seem to have cooled off at all. But on to buzzing stocks, and there are plenty, frankly. But the ones which are really standing out, and we're trying to collate some of those. Nykaa is one of them, doing very well after a decentish kind of third quarter number. Well, 2% up at the day's high. Now, all of that given away, frankly. But that said, let's try and zoom in on a couple of those names. One is Nykaa, one is Grasim as well. Mahima is here to tell us about both of these counters. Grasim doing well.
Right, so in terms of Grasim, if you check the consolidated YOY numbers, revenue was up 27%, but EBITDA was down 48%. Margins have taken a significant hit, and net loss extended to around 169 crores versus a profit of 236 crores. In terms of the key highlights with respect to segments, the cellulose fiber did well, revenue growth of 6%, EBITDA, however, degrew by 18%, but China operating rates improved to around 89 odd percent. Chemicals revenue was up 12%, and the EBITDA also increased by 25%. So this is the segment that is kind of bought in the revenue growth. Caustic soda international average spot prices stood higher at 16% YOY. In terms of building materials, revenue growth was at 10%, but EBITDA degrew by around 14 odd percent. Birla Opus, the commentary coming in from management is that out of total 6 plants which were planned, 4 are already operational. The total capex so far as of December 2024 stand at 9,015 crore, and this is 90% of the total capex planned. In terms of financial services, overall lending portfolio was up by 27%, and total AUM grew by 23 odd percent. Other businesses, which includes the textiles, renewables and insulators, EBITDA remained impacted by exceptional high input prices in the linen segment, but the overall renewable business capacity, cumulative capacity, was up by 37 odd percent. In terms of Nykaa, the company posted good set of Q3 earnings. Revenue was up 27 odd percent. EBITDA was up 41%. EBITDA margins at 6.2% versus that of 5.56%. So a slight uptick of 63 basis points there, and net profit was up by 52 odd percent. In terms of key highlights, why the stock did see in fact an uptick in trade today. However, it's cooled off right now. But the consolidated gross merchandise value grew by 25 odd percent. Beauty segment was up 32%. Beauty vertical volume growth was at 30%, which is where the major revenue growth has come in. Nykaa Fashion also witnessed a revenue growth of 21%. Nykaa Land has done well for the company, as well as the management has said that they are not worried about the competition that is coming in from other players. So this is the overall view as to how Q3 panned out for both of these companies.
Okay, stay with us, Mahima, because there's also a development in Telangana, and where the beer prices have been hiked by 15%. What could this move mean for consumers as well as companies operating in the region? Tell us more about that, Mahima.
As you rightly mentioned, beer prices in Telangana have been hiked by 15% from February 11th, and this is after United Breweries going back and forth with respect to pausing their supply in Telangana and then again resuming it. They've assuming if there are no tax hikes with this. MRP increase for consumers shall be modest around 3 to 4%, and thus it shouldn't impact the industry volumes overall. Telangana is overall a 55 million cases industry, and UBL alone does around 38 to 39 million of the total cases. So around 70% of total market share of Telangana is bought in by UBL. In terms of the price increase, this shall lead to a boost of around 1.7 to 1.9 billion EBITDA for UBL, and this would amount to around 18 to 20% overall increase in the EBITDA. And margins for FY25 estimates, of course, might see an uptick of around 200 to 220 basis points. Telangana has been an EBITDA negative state for UBL because there was no price hike taken before, but this might turn tables for the company. In terms of just to give a context to viewers, price hikes had not been taken since FY20, and this development, though it is lower than the industry expectations, it is yet significantly very positive for UBL. But the stock is not reacting, right now, and this can be because of the markets being under pressure. But overall, it's a good news for UBL.
Interesting. Let's pull up UBL. Let's see how that counter is responding to that. Whether there's a reaction at all. It's a tough day. Well, some bit of volatility, but it seems to have cooled off and 1.5% lower. But that's just the texture of the market, frankly, at this point, so not surprised. But switching over to the auto space, in focus after Eicher Motors and Escorts both announced their Q3 numbers, Varsha joins us to give us a better understanding of some of those numbers. Varsha, over to you.
Let me start with Eicher, wherein if you see the margins, so the key highlighting point here is margins, which is down due to increased marketing expenses, and also other expenses for the company grew by 70 crore, which includes 20 crore of EV brand launch. Management believe that they can outgrow the motorcycle segment growth in the long term, and they say that they are adding value back to product with brand building growth as the focus for the company. While Bullet and Classic seen good momentum over the last couple of months, and company hasn't increased any pricing, some expenses will continue as per the company. If I were to talk about the con call highlights for the company, so they've showcased electric bus and trucks and new SCV platform Eicher Pro X, and also the Hunter 350 have crossed 5 lakh sales mark, and a market share of heavy duty truck is at around 8.9%, and they continue to expand middleweight segment for Royal Enfield, and they believe that they can outgrow the motorcycle segment growth in the long term. And also the discounts level should continue to drop in the CVs as per the management. So these are the basic con call highlights for Eicher. Next on my list is Escorts Kubota, wherein if you see the key highlights for the company, overall, though there was a revenue growth of almost 9%, EBITDA growth was only 4%. Margins have taken a hit at 11.4% versus 12% last year, and the net profit is up. Now, if I were to talk about the key highlights for this, their agri machinery segment, the tractor volumes increased 4.5% year on year, but the EBIT margin over here declined to 10.4% from 12% a year ago, and that's the reason we are seeing the decline in margin. While construction equipment segment saw 0.9% year-on-year sales volume, and EBIT margin improved there to 11% from 8% last year. The railway equipment segment, where they have sold this segment, though, their revenue declined 2.2%, and PAT increased to 32 crore versus 28 crore last year.
Okay, thanks so much for that, Varsha. Interesting, both of those counters, of course, buzzing. Let's pull those up. Let's see how they're doing in trade. Well, clearly not doing well. Escorts 4.5% lower. Eicher Motors 6% now. So the pain absolutely clear and evident on your screen from some of those. But from all that's been going wrong, again shifting back to possibly what's going decently okay. There's going to be an MSCI rejig later today. Reaction likely only tomorrow, and news also will break likely only tomorrow. But it'll be first thing tomorrow, so we'll try and break that down for you. What can we expect? One is we'll have the announcement come in post-market today or maybe late night today. The adjustment, though, will only happen on the 28th of February. Some names you want to keep your eye out on, and those will be critical, especially in the larger index. You'll have something like a Hyundai India. There you go, 13 times flow versus average volume. So that's one stock you may really want to keep on your radar. This could well be a fresh addition into the MSCI index. And if that were to happen, you might see good flows. These are some weight ups. So you'll have an IndusInd, a Varun Beverages, a Torrent, a Mankind, an Aurobindo, anything between 2 to 5 times average daily volume to flows is the kind of flow you'll see in some of these. Mind you, the rejig is effective 28th October, so 28th of February, I apologize. And so you'll still have a sizable amount of time for these flows to come through, but some of them quite material in that sense. You'll also have some bit of outflow because of the likely deletion of Adani Green Energy. And then you'll also have certain weight downs which will happen. And that's in Asian Paints as well as REC. You might see some outflows there. Average volume in front of you, average daily volume. Last off, within the mid and the small cap indices, expected to be 23 additions. Some of the bigger ones are Adani Wilmar, Afcons, Brainbees, Ola. And among the small cap index as well, you'll likely see a couple of deletions. There you go, La Opala, DB Corp, Mahindra Logistics. Some of those will be material. The other stock, and frankly, a very strong set of numbers, and shifting focus from from the MSCI to the aluminium space, and Nalco, the company reported very good numbers in Q3. Frankly, impressive set. Multifold jump in profit, margin expansion very solid. We spoke with the management on the quarter gone by, and of course outlook as well. Listen into what he had to say.
As far as Q4 is concerned, Q4, almost whatever alumina export we are doing in Q4, the bookings which were done earlier, the prices are almost same as Q3. But in the subsequent quarter, after Q4, that is next financial year, first quarter, the prices will come down, which is now the spot booking going on around $530. So that effect will come in the subsequent quarter. But this quarter, a slight reduction will be there, but not major impact. For 25, maybe we will be ending up revenues with around 15,000 crores of maybe the total overall our revenues will be there, maybe slightly plus minus. And EBITDA margin maybe 35 to 40% EBITDA margin will be trying to end up the year with.
And sticking with earnings, spotlight on GSFC as well today. Decent set. We spoke with SK Bajpai about their growth outlook for Q4. Stock down 5%. Listen into a slice of that.
The rain is very good, but if we see that the Q4 is the lean season for the fertilizer industry, and we have also taken the opportunity to plant shutdown of all our fertilizer plants. So Q4 will not be that great as the 9 months of the current financial year. But we hope we are placing our stocks at the field, and we will be relieving our stock positions. And let us see what happens in the Q4.
That's on GSFC. But US President Donald Trump, in an executive order signed on Monday, paused enforcement of a federal law, Foreign Corrupt Practices Act, the FCPA. Somit joins us to tell us more about this. Somit.
Well, if you see, the US President Donald Trump has signed an executive order directing the Department of Justice to pause enforcing FCPA. Now, FCPA is the Foreign Corrupt Practice Act, which became a law in 1977, barring all Americans and certain foreign issuers of securities from paying bribes to foreign officials. Now, this law was amended in 1998 to also apply to foreign firms and people who cause such bribes to take place within the United States as well. Now, as per the US President, this move is going to mean a lot more business for America going forward, and he also said that this act sounds good on paper, but in practice it's a disaster. The US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices which are quite common by international competitors, and this not enforcing this act will make an even playing field for US companies in foreign field also, as per the president. Now, last year, the US Department of Justice had also accused Adani officials of perpetrating a bribery scheme. Now, Adani Group had called these accusations baseless as they were not charged under FCPA. But now, given the fact that the US president has paused enforcing this act, it will mean that the earlier Biden regime or Biden administration who had charged Adani Group officials with the bribery act will not be applicable, given the fact that now the current president has put a pause on this FCPA, which is the Foreign Corrupt Practice Act.
Getting us the details. So clearly you have Trump who's gone ahead and signed the order pausing enforcement of foreign bribery ban. In fact, as we know, President Donald Trump has also signed an executive order directing the Department of Justice to to pause enforcing a nearly half-century-old law that actually prohibits American companies and foreign firms from bribing officials of foreign governments to obtain or retain business. The pause is being implemented to avoid putting US businesses at an economic disadvantage to foreign competitors. In fact, Trump is directing Attorney General Pam Bondi to prepare new guidelines for Foreign Corrupt Practice Act enforcement. To discuss more on this, joining us on our show is Sunil Subramaniam, market veteran, and Gopal Jain, senior advocate at the Supreme Court. Welcome to the show, gentlemen. Mr. Jain, let me come to you first. This was something which was probably anticipated. Would you say that correct? I mean, would you agree to that? How would you read this, disaster act that has been removed by Trump?
Well, maybe he played his trump card. Yes, I think sweeping changes were expected as far as the new administration was concerned, and this seems to be one. And two, his whole mantra seems to be how to help American companies be more competitive, an America first policy. So perhaps that's what weighed with him in furtherance of the goal that he had set during the campaign and otherwise, that this places them at a global disadvantage. And so it's perhaps beneficial to make them more competitive and remove this act, or at least put a pause button for the moment.
Clearly, the kind of impact that Indian companies could have seen on the back of this is what we need to look at, because we did have the Adani group of companies which bared the brunt of something like this, right? Mr. Subramaniam, let me come to you. How would you read this in context to the markets? FCPA suspension and impact on the Adani case outcomes, because clearly the kind of downtake or the correction that we saw in terms of stock prices, which was not warranted, which was not really driven by what happened in terms of the act of the companies, but it was mainly to do with Biden's, clearly the order that they had passed, right? What would you have to say?
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he has used the tariff to extract concessions for American businesses, to make America great again, American businesses great again. So this is another step there. And I think what this augurs well, see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there, he says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes, he will go and practice. So he's, in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners right? They engage with subcontractors. Some subcontractor pays a bribe somewhere. That company will be hauled. Was an overhang, which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And I think the Modi-Trump discussions in terms of, obviously there's going to be give and take, that America is going to try sell military energy to India, and India is obviously going to try to enhance and avoid a very severe tariff. So I think this sets the base well. The market should welcome this kind of a clarity. And specifically, I cannot comment on the Adani stocks itself specifically, but obviously any companies in India, which thanks to their linkages, either by raising securities in the US market or dealing in partnership with US companies, was under the purview of this law, will get a relief in the sense that such things will no longer be overhang on them from a business practice perspective.
Because, you mentioned about the Adani group of companies as well. And since this time and since the announcement has come in, you are seeing that positive reaction come in on the counters as well. Adani Enterprises, which saw strong moves, Power, Green, Energy, Total, AC, you name the companies, all of them trading in the positive in today's session. So clearly, the question is about how big an overhang was this. Mr. Jain, let me come to you, taking this point from Mr. Subramaniam into consideration, that acts like these do become an overhang for the Adani group of companies as well, which now seems they are taken over. But now you're talking about, Pam Bondi, who will be probably issuing revised FCPA enforcement guidelines. Taking this entire scenario into consideration, how are you reading it in terms of the revision that will come through? You plus have the Modi government meet President Trump as well soon. So do you think all of this will be weaved in?
Yes, I think it's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it's send a positive sentiment. And I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have. And it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It will give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
Right. And Mr. Jain, do you think this will overall, remove this overhang on the Adani group of companies as well on an end-to-end basis?
I think so. If the whole idea is to pause, reset, and restart, I think it will have a significant bearing on this. But like I said, it's the announcement at the moment, and we have to just wait for the shape of the new framework or guidelines that they come up with. But yes, it's definitely a positive start in that sense.
And yes, go on.
Sorry. No, I was going to say, for example, in India also in the last few years, we've streamlined several old acts, phased them out, come up with new enactments and laws. So perhaps even globally, people are recalibrating their business interests and therefore laws and policies which will be supportive rather than be an overhang.
Okay. Mr. Subramaniam, clearly, you did speak about how the market should be reading this. But in future, anything of an announcement that comes like this from a foreign country, how should the Indian markets read that? Because clearly, you're seeing investors who were misguided at a lot of levels, right? And at that point in time, the stocks of those companies did collapse, because of which retailers did lose on a lot of wealth, which is not in favor. So how would you advise retail investors to then read news items like this?
So I would say that, this is a lot of noise. A true value of a company should be based on its business, its CPS growth, its market share growth, its competitive advantages. That's what the share market is meant for. Such announcements and this which come from external sources and cost corrections in them, right? I would say that for retail investors, when you get into individual stocks, it's very hard to assess these, right? Whereas you hand your money over to an experienced fund manager through either the mutual fund or through portfolio management services, they will be able to look at this in the light of the fact that there is this concern. It has created a correction in the stock price, but if the core business of that company is not getting affected, maybe this correction is a time to buy. So a smart fund manager with expertise there could take actually advantage of this volatility, but a retail investor probably getting shocked would try to then sell it in the time of panic and would end up losing a lot of money. So I think the story then lies that such news which comes and affects prices don't affect the fundamental value of the company in terms of their future growth prospects. And to assess that correctly, always rely on experienced fund managers rather than going in yourself dabbling into these stocks, on such times. So my advice to them is leave that to the experts and to the people to manage it. These actions which come from an external sources are very hard for a retail investor to understand and manage. And everybody goes by the fear and greed. There's an emotional aspect to investing, and that at the time of fear, they will tend to sell it at a suboptimal price and a suboptimal time.
Well summed up, Mr. Subramaniam. Mr. Jain, clearly the DOJ in 2024 actually had announced enforcement actions in 24 cases related to alleged violation of the FCPA, and there were some 17 such actions announced in 2023 as well. Taking this quantum into consideration, do you think a lot of these cases will be nullified with the Trump government? Because clearly you are seeing a lot of concerns with the old regime.
I think the right word may be revisit or rethink on it, because you put a pause to the present enforcement guidelines, you're looking at new ones. So certainly it will give them that opportunity to rethink, re-examine, revisit this in the light of the new proposed changes that they seek to put in. So it's like a transition. You're moving from the present regime to a potentially different regime in future. So they will definitely perhaps re-look and rethink the existing cases that you mentioned.
So I think a lot of things that need to be done on this end as well. Rethink, revisit, and a pause at the current level is what President Trump has spoken about. And as Mr. Subramaniam also mentioned, clearly it's the retail investors who do get stuck in this kind of noise. So it's very crucial in terms of the action that lies and what you listen to and how you place your investments overall. But thank you, Mr. Subramaniam. Thank you, Mr. Jain, so much for joining us on the show and sharing the views. So clearly, just to sum it up all in terms of the order, Trump has gone ahead and signed an order pausing the enforcement of foreign bribery ban. It's an executive order directing the Department of Justice to pause enforcing a nearly half-century-old law that prohibits American companies and foreign firms from bribing officials of the foreign governments to obtain or retain business. And now Trump is directing Attorney General Pam Bondi to prepare new guidelines for Foreign Corrupt Practices Act enforcement. So clearly, on the back of which you have the Adani group of companies which have seen a surge following Trump's order, because clearly a lot of noise that has been in the making in the past. That's all that we have on this session. Stay tuned to NDTV Profit for lots more on the other side.
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, hello and welcome to Profit Puzzles. My name is Rucha Sumaya. Let's have a quick, and with me is Hero. Let's have a quick look at how the markets are faring. Well, another bad day for the markets clearly. Let's look at the Nifty 50 index. Well, this one is down in the red since the start of the trade, down about 0.6%. Sensex is also down at the same levels. Nifty IT, banking index all down by 0.7 to 8%. Let's also have a quick look at the advanced decline ratios. Well, advanced decline ratio, if we can have a look over here, definitely in the favor of declines. There are 13 declines is to 1 advances. Let's also have a look at the sectoral heat map if we can. All the sectors in the red, Nifty Realty and Media losing the most, while those which are actually losing the least is Nifty IT and Nifty Metals, but none of the sectors in the green. Let's have a quick look at the constituents of the Nifty 50 index. The top losing one is Eicher Motors and Apollo Hospitals, down about 6% in trade, both after its third quarter earnings. We also have HDFC Bank, Kotak Mahindra and ICICI, all the banking names down in the red. But with that, let's also have a quick look at the constituents of the banking index. All the constituents in the red except for Axis Bank, which is just marginally in the green, but the ones which are losing the most are Canara Bank, Federal Bank and PNB, which are down about 0.5 to 1%. Let's look at the Nifty IT index as well. IT is also down in the red except for Infosys, largely in the green, and HCL Technology largely trading flat, but largely the most losing names are the mid-cap ones. L&T Technologies, Wipro, Coforge and Persistence, largely the mid-cap names. Remember that these are the ones which lose the most and gain the most in terms of volatile markets. But Hiral, tell us, how are the broader markets faring like?
It's interesting to see what's happening with the broader markets, Rucha, because not only today, if you see the past data as well, clearly you've seen the mid-cap and the small-cap index, which is down almost 14 to 17% from their recent highs, right? And today, we're trading at the day's lowest level. So we're just around 4 to 5% away from the bear market. In fact, interestingly, if you see in terms of the valuation trend as well, currently, we're trading at around, in terms of the BSE mid-cap index, is around 31, 32 times. And this is the same level where the index was trading in terms of the 2014 highs, right? So the valuation gap is also there. They look expensive, but a major sell-off coming in terms of broader markets. And interestingly, you have the FIIs which are holding a higher position in terms of the mid caps and the small caps versus their position in terms of the large caps. The sell-off in the large caps is FI driven. We're trying to figure out the data in terms of how the DIIs are acting to it as well. But let's quickly look at a few of the other counters which are losing out. KFin Tech, a 10% cut coming on that one. Zenzar Tech seeing cuts in today's session. Elecon is trading under pressure as well. Apart from that, you have a HBL Engineering. That stock is down almost 11 to 12% in today's day of trade. What's actually on the gaining side, Juniper is seeing gains of around 4.5%. MSTC is up and traded again. This is on the back of numbers. An interesting number that was reported by MSTC. Adani Group of Companies, Adani Enterprises is seeing some strong moves, and this is on the back of the FCPA Act that has been paused. LIC, again another one. Star Cement is also seeing some smart moves. So interesting names. A lot of stock-specific action is what we are seeing in terms of today's session. But there is pressure. There is a sell-off that we are seeing in terms of the broader markets. How much further pain is going to be there from here on is what we need to wait and watch and see, because the sell-off versus the valuations versus the FI and DII position in terms of these names is that link that needs to be decoded from here on. But on to the same stocks that are reacting on the back of Q3 numbers, we have Mahima also, who's joining us to give us details on two names, Nykaa as well as Grasim. Let's pull up both these counters on the screens and see what's happening with Nykaa and Grasim. Nykaa is down 2%, Grasim is seeing gains of nearly 1% in trade. Mahima, clearly, both of these stocks, if you see, opposite reaction is what we are seeing. What are you picking up? What's working and what's not working for either of them?
Right, so in terms of Grasim, if you check the consolidated YOY numbers, revenue was up 27%, but EBITDA was down 48%. Margins have taken a significant hit, and net loss extended to around 169 crores versus a profit of 236 crores. In terms of the key highlights with respect to segments, the cellulose fiber did well, revenue growth of 6%, EBITDA, however, degrew by 18%, but China operating rates improved to around 89%. Chemicals revenue was up 12%, and the EBITDA also increased by 25%. So this is the segment that is kind of bought in the revenue growth. Caustic soda international average spot prices stood higher at 16% YOY. In terms of building materials, revenue growth was at 10%, but EBITDA degrew by around 14%. Birla Opus, the commentary coming in from management is that out of total 6 plants which were planned, 4 are already operational. The total capex so far as of December 2024 stand at 9,015 crore, and this is 90% of the total capex planned. In terms of financial services, overall lending portfolio was up by 27%, and total AUM grew by 23%. Other businesses, which includes the textiles, renewables and insulators, EBITDA remained impacted by exceptional high input prices in the linen segment, but the overall renewable business capacity, cumulative capacity, was up by 37%. In terms of Nykaa, the company posted good set of Q3 earnings. Revenue was up 27 odd percent. EBITDA was up 41%. EBITDA margins at 6.2% versus that of 5.56%. So a slight uptick of 63 basis points there, and net profit was up by 52 odd percent. In terms of key highlights, why the stock did see in fact an uptick in trade today. However, it's cooled off right now. But the consolidated gross merchandise value grew by 25 odd percent. Beauty segment was up 32%. Beauty vertical volume growth was at 30%, which is where the major revenue growth has come in. Nykaa Fashion also witnessed a revenue growth of 21%. Nykaa Land has done well for the company, as well as the management has said that they are not worried about the competition that is coming in from other players. So this is the overall view as to how Q3 panned out for both of these companies.
Okay, well, thank you so much for that. Let's move on to talking about Signature Global. Well, this one came out with its third quarter numbers post-market yesterday. In terms of key highlights, it achieved 84% pre-sales guidance, and it also expects to achieve around 47% of collections in the fourth quarter. Realizations also continue on an upward trajectory at about 12,565 per square feet. But looking at the counter, this one is down about 3.5% in trade. But to talk to us more about this one, we are being joined by the CEO, Mr. Rajat Katuria from Signature Global. Well, thank you so much for joining us and welcome on the show, sir. My first question to you will be about the growth and the guidance. What would be the key levers going ahead, especially in FY26, which will aid achieving this kind of guidance?
Surreal, thanks a lot for inviting us to your show. So see, during this year, our strategy was, similar to the past, but very simple that, if we are creating supply around mid-income housing products, it is kind of taking a good, it's seeing a good offtake. So during this 9-month period, we launched multiple projects in our micro markets in and around Gurgaon, whether it be on the Southern Peripheral Road or on the Sona Corridor or on the Manesar side. We've launched few projects, and all of them have seen, good uptake in the market. That's what's led to, us achieving almost close to 9,000 crores in terms of pre-sales during this 9-month period. It was 8,700 crores to be precise. And if you look at the entire calendar year 2024, the pre-sales numbers crossed 12,000. Rather, they were close to 12,800 odd crores. So our strategy is simple to kind of, focus on mid-income housing, keep coming up with new supply, and at the rightful price points to achieve growth.
Hi, Mr. Katuria. This is Anushi joining in the conversation. Firstly, I want to ask about the pre-sales number. It's been on a strong trajectory for FY25. 87% is what we've achieved. Is there an upward revision that we are looking in terms of where the pre-sales is concerned? And also, if you're talking about the collections, now we need to achieve the 6,000 mark. Currently, we need to achieve about 47% of guidance in the fourth quarter as well. So would there be some acceleration? What is the picture building up for collections as pre-sales?
See, there is definite acceleration on the collection side. So we do expect to, do much better collections than what we've done in the previous quarters. We've kept the guidance constant as of today because, there's still room for this quarter, collections to happen and to improve. At the same time, pre-sales, we are confident that, we will cross the 10,000 mark, but, we've also kept the guidance constant as of now on that front as well.
So constant guidance is what we are looking for. Now, in terms of where the revenue recognition is concerned, we've achieved 2/3 of revenue guidance for FY25 in the 9-month period as what we are seeing. Now, for FY26, there is an expectation of acceleration in terms of where the revenue recognition is also concerned. So I want to understand that since you follow a project completion method as per our previous conversation also that we've had, what is the margin picture also going to be like along with the revenue growth that can be expected in the coming 1 to 2 years? Is there going to be an improvement in terms of margins as well? Because there is also focus on mid-income. As you said, that's the core strategy, but some premium projects also adding to the mix.
Right, Anushi. So see, if you look at our current sales picture and the profitability around it, so effectively, we are targeting to cross 10,000 crores in terms of pre-sales this year. And the implied EBITDA margin on this entire business is close to 35%. We are confident about that profitability number because, the land is kind of locked in. It's mostly owned by us. And hence, we are aware of the price points at which it's selling. So, costs could vary, but by and large, we'll be able to achieve the EBITDA margin on this sales which is currently happening at this point in time. What we are seeing in terms of revenue recognition, you're right that we have to follow completed contract method of accounting, which effectively means that if construction has a cycle of, let's say, 3 to 4 years in terms of project completion, what you're seeing in the profit and loss account today is the size and scale of the company which existed about 3 to 4 years ago. For a company which has seen massive growth over this period, post-COVID sort of period, there's a huge difference in terms of what is currently being achieved and what is kind of getting reflected in the P&L account as of today. But over the years to come, there'll be convergence on both the points. The current profitability is close to 35%. The earlier margins are at a gross margin, we've achieved around 27-28% during these 9 months period, but our entire SG&A, which is kind of going into the profit and loss account, is for the current scale of operations. And that's kind of, taking our EBITDA down to around 11 to 12%. But you'll see like a sustained growth, in the margin picture in the coming quarters and years.
Okay, so a sustained growth is what we are looking for, margins coming forward for the quarters. But also let's talk about some of the key launches. Want to get your clarity on Q4. What are some of the key launches that could be expected? And even going forward in say 26, 27, now you have inventory worth of about 50,000 crore with a GDP potential of around 50,000 crore. When can we see some of these launches taking place? If you can give us an idea on these ongoing and forthcoming launches that you have planned for the next 2 fiscals.
So, Anushree, we've identified 3 key spots in the Gurgaon market which we feel are very well accepted by the market for mid-income stroke premium housing products, which is, let's say, on the southern peripheral road, which is like an extension to the Golf Course Extension Road, or on the Dwarka Expressway, which kind of got completed last year and has seen some tremendous infrastructure developments happening in that area, or the Sona Elevated Corridor, which is the starting point for the Delhi-Mumbai Industrial, corridor or highway as well. So in all these 3 markets, we've done launches in this calendar year, which has gone by. And even in the coming year, we are coming up with more launches because, we have a fairly good land resource and we can, come up with launches on a continuous basis. So for instance, in Sector 71, we are going to do a phase 2 of a project which we launched in June 2024 by the name of Titanium. And even in Sector 37D of Gurgaon, we usually brand it around the word DXP. So, we are coming up with 2 new projects in that market as well. So our tried and tested market, you will see more product launches.
And are there any concerns about delays in some of the launches? Now, if you just take a look across some of the real estate players, now they've cited some approval related challenges which have led to a delay in the launches that have been there. Could there be a possibility this happening in the sector in which you operate as well, which is mainly in the Gurugram side of the region? Want to get a perspective on that, as well as the realizations from your own. You're already touching realizations at the mark of 12,500 or so. So do you expect a further upside from these levels, or are they expected to stabilize with the current levels which are there?
So we are not seeing any approval-related snags. So we are not seeing that as a risk at this point in time. The project pipeline, which we are targeting to launch over this calendar year, now we are quite advanced in terms of those approvals. So we don't see that as a something which is very concerning to us at this stage. As far as the price points are concerned, on a portfolio level, we've seen about an 8% plus rise during these 9 months. In comparison to the 12 months, which is gone by, which is fiscal year 24. Going forward, we do foresee like a single-digit rise in terms of price points because demand is still kind of outpacing supply, and we expect the prices to go up in a more moderate manner going forward.
Okay, fair point, Mr. Katuria. My final question to you is about the rate cut which took place in just a few days ago. That was the 25 basis points. Want to understand, considering that you have the mid-income and the affordable side, what is this quantum of benefit that is in it for you, and are there expectations of further such cuts also aiding your business going forward?
So, see, both the, couple of macro factors were very positive for us, whether it was the reduction in income tax, during the budget 2025, or it was the, rate cut by the central bank. So both of these factors are beneficial for the urban consumer who are, our customers as well. So both of these factors will have like a, positive impact on the business.
Okay, well, thank you so much for that, Mr. Katuria. That's the time that we have for the conversation. Thank you, Anushi, for joining us as well. It's always a pleasure to speak with you, Rajat. Thank you so much for joining. Well, moving on with the show, in a significant development, 6 U.S. congressmen on Monday wrote to the new Attorney General Pam Bondi and demanded a probe into the previous Department of Justice, that is DOJ, indictment of Adani Group officials. We have Hiral who's on standby to offer more perspective on this one. Hiral, over to you.
Thank you. Clearly, and this is in a strongly worded letter to Attorney General Pam Bondi, the 6 U.S. lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategic geopolitical partner like India. Now, last year, we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Moving on, they said that the questionable pursuit of a case against the Adani Group is an unwise decision by the Biden administration. Moving on, politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. Moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And the needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to U.S. interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to U.S. interests. Biden DOJ should have referred the case to Indian authorities, is what all the 6 of them have said in the letter that they've written to AG Pamela Bondi. Apart from that, the decision has actually gone ahead and jeopardized relationships with close allies like India, and they should have referred the case to Indian authorities. Addition to this, they've indicated that India is an important ally to the US for decades, and especially against the growing threat from China. US relationship with India is rare and has no congruent. If there is any fallout in relations with India, it could actually benefit adversaries like China, is what they have indicated. And the end culture of lawfare, opacity and privatization of DOJ as the law firm of the left is the comment that has come in from the US congressmen. Very lastly, they've said that they'd written to previously AG on the 7th of January and the 14th of January, but they did not receive any response. And they request them to investigate Biden DOJ's conduct and would appreciate them sharing with them all records which are pertaining to this case for a coordinated effort in uncovering the truth. So clearly, a call to investigate Biden's Department of Justice, the letter by US congressmen that has gone to them and has actually slammed Team Biden.
Okay, well, very detailed analysis over there. But with that, let's have a quick look at the markets and how they are faring. Well, not much change as we could see. Since the start of the day, this one has been in the red. Nifty 50 down about 0.8%. This was what we can see over here. Largely towards the day's low is what we can see. But there are a few stocks which I definitely want to highlight. The 9 stocks which NDTV comes out with. 5 of them are a thumbs up. MTA Technologies, third quarter profits up about 50%. Let's see how the stock is faring in trade. But still, in a downfall of the market, this one is trading about 1.4% down in the red. We have Nykaa, again, strong third quarter results, but as Mahima mentioned, this one is also down in trade about 2%. Yatra also posted its revenue numbers over doubled in the third quarter. Let's see how this one, again, down about 2.3%. So much, even if the stocks are posing good results, the stock is being beaten down because of the weak global cues and, FI selling pressure. There are so many reasons wherein the market is tumbling down today. Grasim also, where its operating profit actually halved, but this one is doing good in trade is what we could see. Oh, that's very strange. So this market is clearly unpredictable. Good numbers are making the stock come down, and bad numbers is actually making the stock go up. But nevertheless, let's move on to Eicher Motors. This one is also pulled its third quarter numbers very clearly. Bad kind of result is what we could see over now. The stock is tanking about down 6% in trade. While you still with us, Varsha, if you can hear me, please go ahead and let us know what is Eicher Motors indicating about its third quarter results.
Yes, thank you for that. So clearly the company is under pressure. Now the renewed focus on growth has actually hurt the margins for the business, or I would say the profitability slightly. Adverse product mix and higher marketing spends have led to Q3 miss through, though domestic sales for Royal Enfield expanded 13% year on year against a 2% decline in the industry. The management had indicated that it would continue investing in demand generation activities, including brand building efforts to drive future growth. So clearly the change in product mix and of course the marketing spend has led to EBITDA miss slightly.
Companies or refiners like yours, it's a grand event for all the energy companies to come and showcase their capabilities, what they are doing, what they intend to do, and what are the competencies which they have. And this is an area where we can build global partnerships. There are people who are coming from different companies. It's not only the energy players, there are technology players, there are other stakeholders who are well represented over here, and definitely when you work along with them, you can achieve much more than what you intend to.
Right. Sir, this is coming at a time, if you look at the context, when the US is talking about America first, there's US sanctions on crude and everything. How do you think for companies like us who are now like 30-40% importing from Russia going to affect this and also the kind of deliberations that you are having here? Even I think you are talking to Russian delegates. So what exactly is the roadmap ahead for a company like yours?
See, there is enough of crude available. There is no dearth of crude. Even earlier when the Russian crude discounts were not there, the India was processing crude. We were getting crude from Western Asia and various other places. So as it is, there is no dearth of availability of crude. Even now, when the US has not sanctioned the entire Russian crude, they have put only certain entities and the companies in sanctions. Yes, within the sanctions, whatever crude is available, that is definitely will be bought and the remittances would be paid. So that is not an issue. And the crude diet which HPCL has, we have a wide variety of crude availability from various countries and different crudes which will be processed. So as such, there is no problem as regards crude processing is concerned for us.
Right. So, HPCL, in the context, Prime Minister is visiting US tomorrow. And even the minister was saying that, Hardeep Singh Puri, that major Indian companies are now talking for LNG imports also from US. So, are you all also in discussion for some contracts and also for crude from US?
See, you are aware that we have recently commissioned our HP LNG, that is a LNG regasification facility in the state of Gujarat, that is Chara. Now, having set up the facility, now we are already into the market for getting into a long-term supply source for our future requirements. So in that regard, we are exploring various options, including whether availability of gas from US or any other country. And definitely, if an opportunity comes, we'll look for and tie it up with them.
And recently, I think you.
Okay, well, it's time for a short break on the show, but that's lots more on the other side. Do stay tuned.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Welcome back to NDTV Profit. You're watching Profit Puzzle. Well, on to an NDTV Profit exclusive. At the sidelines of the Aero India 2025 event, my colleague Sajid Mangat caught up key players from the defense sector and about the sector's strengths, challenges, and upcoming opportunities as well. Listen to a slice of the conversation.
We know for the fact that you've been involved in space engines for more than 3 decades now. And now you're venturing into the biggest question that everyone is asking in aero, engines for Indian aircraft. Where are we on that? And you've been working on it for last couple of years, since the last Aero India show when you got the first order. Can you take us through the journey that we have been talking?
Sure. So for Godrej, our passion is engines. As you rightly say, we started manufacturing for ISRO way back in 1985. And since then, we have been working with ISRO for various engines. And India does need the next generation gas turbine engine. And we won this order from DRDO GTRE about 2 years back. And since then, we have been manufacturing and developing this particular engine. We have shipped one set of an engine to GTRE. And what you see over here is the second set which is being displayed over there. So we are on an advanced stage. A lot of work from manufacturing of toolings to understanding the process, metallurgy, welding, the ovality of all the various casing, etc. So a lot of learning they have come through, and I think we are well ready to deliver further engines to the Indian programs.
One of the things which has been in discussion here is about the delay in Tejas. I know you don't do much for Tejas except for some of the actuators which are used here, right?
Yeah, for Tejas we have developed along with ADA the flight control actuators. The LESA and the ABC are now flying, and what you see over is the L1 actuator. So this will be under test very soon. Also, we have developed various lubrication pumps. The nose wheel steering is our own design. So this is a part of the landing gear where after the aircraft lands, it kind of maneuvers onto the tarmac and takes it to the parking. So that's the nose wheel steering. That's our own design. So we have ventured into the build to spec. Earlier, up to 2021-22, we were a build to print company. With this, we have ventured into the build to spec. We are also working on ejector release units again for various programs. The uplocks which take care of the landing gear when they lock in or to be released. So various hydraulic and electromechanical actuators, whether they are for the flight or otherwise, is something what we are focusing on. That's where we are developing our design team. We just launched our design team now, and our design head will be here in short while. So a lot of new things are happening from build to print to build to spec, but focus remains on the engine.
And you say build to spec, you were basically talking about that you will design the hardware yourself and then get it approved and which
get it approved, yes.
And how big is that journey in terms of build to spec?
So there are various modules which we need to create. Like for example, if you're going for a nose wheel steering, then there are 3 types of valves, including the servo valve, which is a top of the line, kind of technology as far as actuators are concerned. So this is what we are working on. The design team is being nurtured at Godrej, and it'll take about 2 to 3 years for us to venture out into export area. So right now we tend to work with the various local programs, gain experience, and then we'll be ready for flying.
So we are talking about the engine parts. This is the part which engine parts is.
So these are the parts from our GTRE program, the Kaveri 50-ton kilonewton derivative engine.
What is it going to be used for?
It's going to be on a platform which could be a kind of a Hail UAV platform. We are still not sure about the name, but it's going to be on that platform. And DRDO has various use cases which they are trying out and giving it to the ministry. So we await for further decisions on this program. But for us, getting this technology into India, understanding, developing a team is something which has been a great experience, and we are ready to be available when India launches the bigger 100 kilonewton and 110 kilonewton as being discussed with DRDO. So those kinds of work can be done at Godrej now because we are invested, we have the knowledge, we have learned, and that's the next curve and definitely India needs something very soon because that particular injection is very important to India.
Are you also tying up with global players like a Safran or a GE or any other engine maker to make those parts or engine fully in India?
So we do work for various engine manufacturers. What you see on the right hand side are all engine components. Of course, not as complicated as what you see for the Indian engine, but we are invested with them, and definitely these are the stepping stones to what is the next curve which will happen. So yes, we're working with most of the engine manufacturers like GE, Safran, Rolls-Royce, etc. And we definitely stand a good relationship with them to work on a future larger component like this.
Give us a sense of what kind of products that you make, because you have been a winner of IDEX and also winner of Aditi. These are the two programs which Ministry of Defence runs, providing grants to startups. So what kind of products have you won through that?
So as part of Optimized Electrotech, we have been building AI-based imaging systems. These have got edge analytics at the equipment level itself. We have been winners of IDEX multiple times as well as with Aditi now. And with all of that, we have been building different types of products, but the overall structure remains the same. We build optics to AI, everything on our own. For example, this is one of our products. This is a micro missile seeker. This is a micro missile. This is useful for tactical warfare.
This is used in drones.
This is used in drones. So the drones would normally carry the missile. That is how it works. So the micro missile is useful for tactical surveillance, and then the moment it has seen and you have allocated what the target is, what we have built is this seeker. The seeker allows the missile to make sure that only the person or the object of interest is followed, tracked, and then eliminated. So for example, here you can see that the seeker would have different targets that are given. Those targets can be given by the drone and said, this is the person of interest, only that person will be followed. This is one of our products. Similarly, we have other products that are for different purposes, like this one is. So this is for a grenade launcher. In this, we have been able to do precision elimination of targets at distances. So in a normal case, a grenade launcher requires you to have a lot of computations being done because grenade travels in a projectile motion, unlike a bullet which travels in a straight line motion. So because of the projectile, it's important that the corrections are done for wind, temperature, velocity of the, muzzle velocity, everything before you fire the grenade. And thereafter you need to make sure again that it works in day and night. So this particular equipment can work in day and night and can do precision elimination of targets.
You want three IDEX and one Aditi, correct? And if I'm not wrong, you get a grant of roughly around 1.5 crores for IDEX,
correct,
and 25 crores for Aditi. How have you used that funds in what kind of development, and how big is the company now? Give me something about your company. How big is it now?
So we've been co-founded by alumni of IIM Calcutta and IISc Bangalore, and me and my co-founder have been the major force behind this. And then we also have had business experiences in the past, having exited some other businesses, having run some cash cow companies. So with all of that, we have been impatient in the defense business. As far as IDEX is concerned, it was just incidental for us. We didn't start the company for IDEX. IDEX just came on the way when we were working on our own AI-based systems. But when IDEX came up, it was a good impetus because 1.5 crores is not sufficient to build a product. But 1.5 crore grant gives you a stamp that you are building something which is going to be useful to the nation. So based on that, then we were able to attract some investors. So now we have Venture Catalyst, GBFL, Equanimity Ventures. All of them have supported us in our journey of defense in the last 5 years. And now as we grow for the Aditi and further more challenges, we also have other investors backing us up. So it's been a fantastic journey so far.
So for Aditi, what was the product that got Aditi?
So Aditi is a space challenge. It is not a defense land-based challenge. In that we are building a neuromorphic satellite. That satellite will be able to look at, do Earth observation. But unlike typical normal sensors, which are imported from Israel, France, US, Germany, other places. This one, the sensor itself is also being built by us. So that is going to be a revolutionary change between what India has been doing so far versus what we will be delivering to Aditi after 3 years.
You've been, talking about how you try to put the building blocks for so that the defense division and it can take off. Take us through some of the tie-ups that you've been doing so that we get an idea of where are we on BML.
So if you say over the last 18 months or so, we have tried to rebuild BML, done a lot of structural changes, brought in a lot of enabling mechanisms within the company, and we have also tried to diversify to uncharted area. One of the major areas was the naval and maritime sector. So when we restructured the company into 11 strategic business units and 2 micro SBUs, the 2 micro SBUs had one as the maritime and one was the SEZ, the special economic zone. And recently we have come out with the 12th strategic business unit, that is sustenance for rail and metro, looking at the kind of rail and metro orders that we are getting, as well as the shift in the model from the acquisition model to the life cycle cost model by both the railway and the metro now. So with that in mind, we also thought that when we are restructuring the company, let us rebrand it. So if you look at our earlier logo, it had a phoenix bird. This was encircled, half circle. So we took it, from there, and we thought, okay, let us replace the phoenix with the albatross, which is very strong and agile and all that stuff. But then we thought, no, let us go for a new dimension, which is the Infinix. I call it the Infinix. So Infinix is nothing but the phoenix bird, which is imaginary bird, and then make it infinity. So the new logo is a mixture of the phoenix and the infinity. So we call it the Infinix. And the Infinix is basically, again, if you talk about the Vastu, as per the Vastu also, something which is going up is always auspicious, it's always good. So the Infinix is going up. So that's why the earlier tagline was New Frontiers, New Dreams. Now it is Beyond Possibilities. So Beyond Possibilities is something I want the people to think out of box, which is never possible. And a lot of things have happened which were never possible for the people in this company to believe. One of those things was the bullet train.
Yes.
And the bullet train that we are building, the first indigenous bullet train, of course, that is a collaborative approach with the Indian Railway, with Integral Coach Factory, with NHSRCL, BML, all put together. So I'm sure it is going to be the pride of the nation. And that was something which was beyond possibilities of one time. No one in BML at least could believe it.
We were trying to get it from Japan.
But now we are very, very confident that we will be able to do it. So that is one example of beyond possibilities. And not only that, is a small example. There are a lot of things, When we did the 1500 horsepower engine, the first firing in October 2023, the order book is very small. It's only 867 crores for 2 trains having 8 cars each. Plus, of course, there is developing cost and other things. So order book is really...
But it's more of a technology and the capabilities.
It's a technology. You see, over the last 18 months, order book is one thing we are working on. But at the same time, we are trying to create value for the country. So the engine program, the rope shovel for the mining, the motor grader, the bulldozer, the dump truck, and now the bullet train, then you are getting into maritime. These are all basically the value creation in the long run and creating value for the country, removing the dependence of the country on foreign OEMs. So that is what we are doing, and I am very happy that we are able to serve the country in that well.
Sir, you've been always involved with urban mobility, metros and everything. Bullet train is something which is intercity, which is going to be coming. Will it be as, the speed will be as good as the one which we talk about of Shinkansen or Japanese train, or is it?
So you see, I always talk about crawl, walk, run. So there also, right now, the Shinkansen, it took 6 years for the Japanese, 1950 to 1964. And it is 60 years now since the Shinkansen is running. BML was born in 1964. So to say that straight away will jump at 320 kmph is not right for me. So we took a conscious decision that we will design the train for 280 kmph, but it will run at 249 kmph. Because as soon as we cross 249 kmph, 250 kmph, the car body material, the standards, everything changes. So first, let us learn at 249 kmph. Already you see the Vande Bharat sleeper that we have, it has operated at 180 kmph. So 249 should, from 180 to 249 itself is a big step, a big leap.
We see that a lot of stuff is happening in technology front, AI being brought into, machine learning being brought into. Where is Cyient DLM in all this?
So Cyient DLM comes with some sort of a very unique legacy. We are, while a lot of our business is manufacturing, but we take help of our parent, which is Cyient Limited, which is a very large recognized engineering services house out of India. It's probably recognized as one of the best aerospace and defense engineering services come out of India. So a lot of it, what we are doing is getting pulled into the products which we are designing. So that's quite unique, and that spans across the spectrum. What is also important is we do a lot of medical, we do a rail transportation, automotive. So there's plenty of cross-learning in terms of ADAS, deep learning, even some smaller based AI/ML algorithms which you can learn, implement lean on embedded systems. So these are being tried. So a big chunk of our business is in the future going to be what we design. And those I would say are quite superior from the algorithm side, which is what you mentioned.
So basically to, manufacturing to spec, basically, that kind of stuff. So you have the capability now, the design team and everything in place for that kind of transformation that you want to do?
Oh, certainly. So this has been ongoing for about past 7 years. So when we did this acquisition, we said we should move to for more value, not just manufacturing, not just engineering service, but where we can design, certify, qualify products for our customers, both India and abroad. So from a certification standpoint, and which is quite some technology leap. It's not just the question of this technology, but the certification process. So we have very strong credentials in certifying products with FAA and EASA, the commercial aviation, which probably are more stringent than the defense. And then we see the market more holistically, not just the capital expenses which are happening out of India. Because if it's pure defense, most of the country have local regulations from design on what they can give out. But commercial aviation is more free. And India is a very large commercial aviation market. Even I would say, I think the overall capital budget of at 15 years time frame is probably going to match what we are doing in aerospace and in defense. And there the Indian component of design is very limited. So we are taking both the pieces, that's the commercial aviation as well as the defense integrated, leveraging on our technical capability and more importantly process capability to make products.
So you're currently into aerospace manufacturing, but you're also transforming yourself into electric vehicle, automotive space, or railways, looking at railways. What kind of opportunities that you see there?
So there are plenty of them, and I would just name a few of them. So for example, we are also doing a complete for an off-highway vehicle for a customer in Europe. We are doing a complete system which is sense and learning, so that it can avoid any obstruction and damages that are coming in. So that's a play with radars, with cameras, with ultrasound sensors, integrating multi-sensor data fusion and predictive, and then controlling this part. And for automotive, it has to come at a very lean price. And we see very strong applications of this in defense, for example, in UAVs, urban air mobility. So there is enough from a technology level, quite a bit of cross-play. That's one example I can give. There is also in terms of motor controllers and the kind of power rails. So while you see automotive is 400, 800 volt DC, same thing you see in urban air mobility. Electrical aircrafts are also talking about similar rail. And there we have the expertise in terms of power conversion, motor controller design. So that's becoming applicable. But all of it is very process heavy. So we basically leverage what we do in commercial aviation across to the other sectors. I'll put this.
Well, take us through, we've been seeing a lot of stuff with respect to aerospace industry, and how you've been growing over the years. Take us through the kind of work that you do for the aerospace industry.
Okay, Sajid, firstly, welcome to our chalet at Aero India 2025. This business is a labor of love. It was a childhood passion of mine. I was an early hobbyist, and in 1993, in a garage behind our hydraulic pump plant in Pina, we started a small startup 32 years ago,
to build aerostructures for DRDO and HAL. And these were the pilotless target aircraft, the intermediate jet trainer. And then over time, in 2005, 2006, India started globalizing, and we were a pioneer in that. We were a pioneer in the first wave, which was India for India, and then this is India for the world. So what you see here are the flap rack beams of Airbus. So the ones above are the world's largest selling aircraft, the A320 family, which is the A318, A319, A320, and A321. We are sole supplier of the flap rack beams that take the aircraft up and bring it down safely to land. You know what you have under the wings.
The flaps which are
both the flaps. This one is for the big A330 aircraft, again sole supplier. And over the last 18 years, we are now producing as a sole supplier for 800 aircraft every year.
And what is the kind of order book that you have from Airbus?
So you have to just multiply this business. These are long-term contracts for 10 years. On the basis of this work and high quality performance, on-time delivery performance, we won the order for every variant of door for the latest aircraft, the E220, and you see some of them here.
Okay.
So that's the emergency escape hatch in the
cockpit. Yeah.
That's the O-wing escape door. And these are very complex, high safety products. That's the cargo door. We also have the service door and passenger door, but we didn't have place to display it here. But this order alone is roughly a $500 million order over the next 10 years. And so you could probably say double that, roughly $1 billion over the next, say, 10 years.
And that could be the orders only coming from Airbus.
That's Airbus. Now, for Boeing...
Oh, yeah, because I've been looking at some...
We have been an award-winning supplier to Boeing worldwide, but with Boeing, it's all military. So we work on 3 programs. Their heavy-lift helicopter. It's the world's largest, the best heavy-lift helicopter, the Chinook. So you can see we've been producing the main pylon and ramp for that. Then for the really powerful F-15EX, it's an unbeaten aircraft, the F-15. The EX is their latest fighter. We produce products again on a single source basis. And then the world's best submarine hunter is the P-8. We are manufacturers, sole producers of the power ignition cabinets for that. And then recently we've been working with Dassault. So you go to the Dassault exhibition and you would see this rare fuel tank of their latest aircraft, which is Falcon 6X, which actually goes into service in 2025. Over the last 1 year, we developed all the tools, the assembly jigs, parts, including class 1 parts, and a major assembly which holds the fuel. This is the rare fuel tank. And we work closely with them.
Yeah.
It's part of their Make in India strategy, and we're very proud to have succeeded in a very nice way, very quickly for that.
So that's the aerospace part of it, right?
This is one part of it. But what's also important is that we are partnering with a whole bunch of world-class Indian companies to broaden and increase the volume of business that can come to India. Traditionally, these kind of companies that are all peers compete with each other.
Yes.
And in a way, they all limit their ability to grow. What we are all doing is companies like Aker, Sphera, Sansera, LNW, Centum Electronics, Sasmos, we work closely as partners. We hunt for business together, and then we partner each other in how we win the business and distribute it. So it's really together for India. We're really good at it.
In the aerospace segment, technology is evolving on a faster scale. Fly-by-wire, drones, UAVs. These are some of the newer technologies which are coming into play. How is Dynamatics looking at these emerging technologies?
So that's interesting. I told you that 32 years ago we had a startup in Pune. Now behind our aerospace business, which is now a global business, We have a little startup called Dynaton Systems. It's really about autonomy. With a deep industrialization, we have developed a whole family of autonomous systems, a system of autonomous systems, where we have products like our Cheel, which is a big surveillance drone, 15 feet wingspan, ability to fly deep into enemy airspace, collect data. That data is then transmitted down and fed into this, which is a militarized loitering munition. It's India's first jet engine loitering munition. It flies at 600 kilometers per hour. It's called the Katil. And so what you do is you capture all the data. We have a little bit of specialized AI in it. And it actually flies like a bird without a GPS or radio control. So it's autonomous. Once the data has been fed into it, the sighting data, it flies optically with the intelligence on board.
Okay, well, that's all the time that we have on the show for now. From myself and the team members who's put this show together, thank you so much for watching.
entire special package and measures are kind of focus on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. It's not looking pretty at all where we are, both on the benchmark as well as broader markets. 1.5% now on the benchmark. Let's pull up the intraday chart of the Nifty. And there you go. We've slid sharply, at least over the last hour or so of trade. And we're clocking now 23,000 one more time, knocking at that door. We'll have to wait and watch as to how or what to expect going forward, and we'll give you maybe a better perspective as the show goes through. But that's on the Nifty. Let's pull up the heat map. You have some stocks, of course, already. It's a highly pressured market, but seeing more pressure. And those two at the bottom of your screen are those stocks. On the back of earnings, Street not impressed, and you're seeing a 6 to 7% cut on both Apollo as well as Oysha. You're seeing pressure across the board, 48 stocks in the negative, so I'm not going to try to pull a trend here. But there's extreme amounts of pressure across the board. The only two pockets possibly in the green, Grasim again on the back of numbers, and Adani Enterprises, given the newest development with regard to the Trump administration. Let's pull up the contributors as well on the Nifty. Not sure how much that's going to help, but yes, across the board you're seeing selling, but some of the heavyweights also contributing to that. 350 points in terms of negative contributors, and the pressure is really on. Let's look at the breadth of the market as well, and we'll try to try and break down as to why there's just so much weakness at this point. So now this is probably the weakest breadth I have likely seen in a very, very long time. Less than 100 advances to 2,100 plus declines. So very, very weak in terms of breadth, and it's getting worse. If that was even a possibility, that's exactly what seems to be happening. So the market breadth extremely weak. The broader markets is where a bulk of the pain is, and I'm going to toss it across to Neeraj for that. But first off, I'm going to try to cover why we are seeing so much pressure. 5 points. One, we've seen relentless FII selling. $11 billion worth of selling is what we've seen from FIIs over the course of calendar year 2025 alone. In 32 trading sessions, we've clocked nearly $11 billion negative dollars of FII outflows which have come through. Second, we've seen Trump uncertainty with regard to both policy as well as tariffs, and some sectors impacted by that. Of course, certain pockets like metals disproportionately impacted by that. Maybe some bit of certainty may start to come through later on this week when when PM Modi meets President Trump. Third, we've seen cut in earnings estimates. Now, this can't be absolutely quoted to all companies, but to a large extent, we've seen cuts rather than increases in terms of earnings estimates. Valuations, well, they were punchy, to be very honest, especially at the broader end of the spectrum. But we're seeing cuts on the Nifty as well, where valuations were okay-ish, and a lot of investors and analysts were quite bullish with regard to where the Nifty was. And last off, weakening global as well as domestic macro, as well as the currency. The global macro, looking from a growth perspective, a slight negative bias coming versus calendar year 24. You're also seeing the Indian rupee continue to weaken. Of course, today it's strengthened, which is a big positive. But otherwise, we've seen a trend of a weakening rupee, a strengthening dollar. Bond yields have bounced back up to 4.5. They've tapered downwards post President Trump taking office. But now we started to see the US bond yield go up. The dollar index, of course, at 108 is closer to its highs rather than lows. And of course, oil prices not helping either, nor does the fact that a possible US rate cut would well get pushed. So all of those macros playing out on Indian markets. But Neeraj, one is your sense with regard to markets, but second is broader markets. I mean, that's where a large part of the pain actually resides.
4% for the small cap index, and that tells you a story or two. I don't need to say anything more really. I mean, almost everything has been taken to the cleaners, 3.5% today. Mid caps, but small caps are nearly 3.89 or 3.9%, and that is where the problem is. Kush Bora, founder of kushbora.com, Himang Jani, market expert, join in to share their thoughts. Gentlemen, both of you, thanks for joining in. Somber day, Kush. That buying, unfortunately, didn't quite carry on. The question only is, are you at these levels, nearly 23,000 on the Nifty, you are revisiting the recent lows? Is there more downside here? Would you initiate shorts here, Kush?
Hi, Neeraj. Hi, Hemang. First, a very good afternoon. Well, Neeraj, if you recall the Friday conversation we had, the message was very clear that this is a recovery rally that we are seeing from the lows, that the Nifty had recently made, and not a reversal one. And this is how typically, a recovery rally would last. You would see bouts of selling pressure. Today, what we are seeing yesterday, on Friday and today, what we are seeing, a bit exaggerated, Monday and today. But this is still, a downturn, and within which we are seeing some sort of rebounds. Now, whether we see a bounce or not, there is a slim chance that, we might see, if I have to just, put some data out there, the 23,000 and 22,800 foot still has a fairly decent base, hasn't budged. In fact, they've only added open interest The PCR on the Nifty is 0.66, and we've seen a rebound typically come from the 0.6 level. So there is the case for a rebound, but in a market which is so strongly towards the downward momentum, there is a possibility that you might actually break some support zones and then perhaps attempt a rebound. Will I go short in this market? Not at the moment, because we are, again, as I said, very close to those support levels, 23,000 where we are right now being the first one, and 22,800 being the second one. Any kind of a rebound will actually be taken as an opportunity to sell closer to the 23,300 mark.
Okay. Rebound and opportunity to sell, not right now. Fair call. Hemang Jani, for every retail investor who might have mid caps and small caps in the portfolio, the last few days have been alarming. Add to that S. Naren saying that it might not be a good idea to be even in the mid cap and small cap mutual funds, whether SIPs or otherwise, right? So all of that adding fuel to fire. Are you bearish after this nearly 19% fall in the small cap end of the market on the small caps?
Good afternoon, Neeraj. I think it's a fact that we had a bit of exuberance in the broader market, and we are going through a process of cleanup, as we call it. And it's not about fund managers saying, it's more about the fact that whenever you have this kind of frenzy and very high valuations, you do go through pains. Now, the point is that there is a bit of a jittery at the investor level, and people are trying to kind of create cash and protect whatever they can. Suppose at one point the portfolio was up 30-35%. Now you're left with hardly, let's say, 8 or 10%. People are trying to even protect that, whatever is left over, 8 to 10% also. So exactly at what point this will stabilize or settle, I honestly don't have a view on that. But I do think that, at some point when you have this kind of a sell-off across, you will find some good opportunities as well. At the moment, rather than trying to predict at what level it will stabilize, we should try and wait and watch and let it stabilize first. I do think that at the index level, there is a overreaction. I don't think there is a justification in deeper correction at this point of time, given the known facts like earnings, global backdrop. But sometimes when you have a sell-off like what we are seeing, there can be a stretch on the downside. So we are of the view that there is not a case for a significant downtick, but we should let the market stabilize before jumping in.
Okay. Kush, if I can come to you, picks in this very difficult market.
Only difficult if you're looking at the long side of things, right? Today I'm not. Today I'm not. While the market does present you an opportunity, on the short side, why not take it? So I've got two calls, both of them on the short side. One of them is LIC. Again, we've seen a breakdown. The stock had actually taken support at near that 800 mark for 3 times, including yesterday, but today it's broken down below that level. Again, volumes are significantly higher. So on the downside, you're looking at targets of 780, 770 with 810 being your stop loss. The other call on the short side is IOC. Again, the entire pack has seen fair bit of selling pressure. Every opportunity towards the 20-day moving average in this and its peers has actually been an opportunity to short and create more shorting positions. So IOC, you could have taken your entire pick from the entire space. Right now I've taken IOC. The reason being that even this has retested and probably gone just below the support zone of 120 or hovering thereabouts. On the downside, your targets are 117 and 114. Stop loss comes in at 124.
Okay. All right. So those are picks for this afternoon. Varsha, in fact, is waiting by because Apollo Hospitals is our stock of the day. 7% down. And, 6% plus, nearly 7 at the bottom. But on the back of numbers, which didn't look as bad, right, Varsha? So talk to us about what's gone wrong.
Yes, so technically, in spite of inline numbers, the stock is under pressure. In spite, all the other hospital stocks are also under pressure. You take Yatharth, you take Max Life, every other hospital is under pressure. Now one of the reasons is Adani to partner Mayo Clinic to establish affordable and world-class healthcare facilities. Now they're going to build 200,000 bedded multi-super specialty hospital and medical colleges in Mumbai and Ahmedabad. So this might be one of the reasons, all the hospital stocks are actually under pressure. To speak about the numbers, so for Apollo hospitals, the number were pretty much in line. Though, net profit was up substantially, this was also aided by other income, a good growth in other income. But apart from that, all the numbers were in line. So if talking about the segmental performance, the hospital business, there was a 10% year-on-year volume growth, and a focus on higher growth specialties actually aided the revenue realization for the company. Overall hospital occupancy, if I were to talk about, rose to 68% versus 66% last year. This was driven by increased patient volume. Apollo Health and Lifestyle Limited, if you see there also, the revenue grew 15% year-on-year, primarily attributing to maturing network. And the Apollo Health Co, which consists of your Apollo 24/7, the PAT was positive versus lost seen last year on account of the positive PAT is on account of growth in operational revenue and of course optimization of 24/7 operating cost. Lastly, speaking about their expansion plans, they are on track to add 3,500 beds over the next 3 to 4 years starting from FY26.
Okay, so some positives, some negatives. Kush, let me come to you first on the technical side before I go to Himang on the fundamental.
Well, I mean, of course, today Apollo has taken a big knock. 200-day moving average being held on to for the last month and a half. Finally, given way on the back of very strong volumes. I think this one's a very clear avoid at the moment. But I wouldn't say that, Harsh, for the rest of the hospital space. In fact, just last week, we had given out calls on Krishna Institute of Management and Narayana Hrudayalaya. While both these stocks are down, you will notice that the volumes on these haven't even clocked the last 1 month's average. So I think for me, some of these, dips actually present a buying opportunity. So I will stick with, KIMS and Narayana Hrudayalaya as the buying opportunity in the fall that we are seeing. Some of it, what Varsha said, could be the sector-related news, also clubbed with the fact that, the markets are, where they are today, in the red. So that could have actually exaggerated the fall for at least the Narayana Hrudayalaya. But if you see, as I said, this is on the back of good volumes. So if you want to look for a buying opportunity, keep KIMS and Narayana Hrudayalaya, on your radar.
Okay. So that's as far as some of those healthcare stocks go. Now, on to numbers which came out, and MTAR Tech came out with a set of numbers which optically would have, maybe pleased some of the investors for sure. Revenues were up 47%, margins were flattish, net profit up 53%, flattish in the sense from 20.2, it came down to 19.1, but in or around that 100 basis points range. Parvat Srinivas Reddy, who is the managing director of MTAR Technologies, joins in right now. Mr. Reddy, good having you. Thanks for taking the time out. Put the quarter into perspective. Was a 47% revenue growth something that you were baking in when you kickstarted Q3, or were you hoping for a different outcome?
Yeah, we are hoping for a similar outcome when we kickstarted Q3, and the Q4 is going to be even stronger than Q3 as well. So we are in line with what guidance we have given for FY25.
Okay. What's led to this growth, Mr. Reddy? Could you just explain that? And are those the factors that continue into Q4 as well?
Yes, for sure. And obviously, our aerospace segment, clean energy segments are doing very well. And we have done a lot of developmental activities in terms of first articles. Now the volumes are kicking in slowly. So that's how the revenues are going up, and the margins will also improve further by end of the quarter.
So I want to try and understand from you. You're of course growing off a low base. For the next 2 to 3 years, what's the journey with regard to growth going to be like? What's the visibility?
Yeah, that's a very good question. The last 18 months, we have been working on various projects, various areas, adding new customers as well. So we have a clear roadmap for the next 3 years. We are going to grow at the rate of 30% revenue growth year-on-year basis for the next 3 years consistently, more or less. And also the margins are going to improve by 2 percentage points in each of these years. So we end up with 24% margins by FY26 and thereon 2% incremental margins year-on-year basis. So we are very optimistic about this based on the kind of work we have done over the last 18 months.
And so where would the growth come from? Would it come from domestic? Would it come from export? Where would a bulk of that come from? And how would the mix therefore change, if at all?
The growth would come from domestic as well moving forward because of the nuclear division and the defense programs, what we're working on. Obviously, the exports, we're dealing with a lot of MNCs right now, so growth would come from there equally as well. So it's a mix of both, slightly more tilted towards the export side, about 60 to 65%, and 35% from the domestic segment as well.
Mr. Reddy, just wondering, when I look at your numbers, and please correct me if I'm wrong here, but for example, December 2022 or thereabouts, right? On a similar base of revenue, I mean, you did much higher margins, you did much higher profitability as well. Now, when I hear you say that you anticipate that you will grow about 30% CAGR for the next 3 years, would it be on the revenue front, or would it be on the revenue front while maintaining or improving margins from the current 19% over that 3-year period?
That's exactly what I said. We're going to not only increase on the revenue front 30% basis, but also the margins are going to improve 24% to 28% by the end of the 3rd year. So that's what we're looking at.
Okay, I didn't hear you. Okay, fine. So I missed that, but you are saying that from the current whatever 19% EBITDA margin, you move up to nearly 28%, let's say by FY27. Would that be a fair assessment?
FY28, that's what I meant, the 3rd year.
FY28, yeah, excuse me. We're at end of FY25. So FY28, you reach there. Okay. And would you, I'm guessing some of this might be coming in by virtue of some capacities coming on stream, etc. Do you need to do any kind of capital raise in order to execute or set up new capacities for this 30% CAGR growth? That's virtually doubling or more than doubling in 3 years' time by virtue of growing 30%.
No, we don't need any capital raise. We're funding it through internal accruals and whatever small debt we raise. That's about it. We don't intend to raise any capital. We can easily fund our growth internally. That's absolutely not an issue. And if you look at our operating cash flows, also positive operating cash flows of 102 crores for this particular quarter, which is the highest. So we are improving on the working capital days as well, and also on the operating cash flows, positive operating cash flows as well. So we'll not be going for any additional capital raise to fund this growth.
So while you're in some of the more new age sectors, if I can call it, whether you call it aerospace, defense, clean energy, as well as nuclear, I want to focus more on nuclear because of the budget allocation in nuclear. First, I want to try and understand from you how many players compete with you with regard to nuclear, and therefore how large is the opportunity size for you and all of your competitors combined?
See, the competition is very less in nuclear because the learning curve is very long. It's something, an area which MTAR was there for the last 35 years. Now, if you look at the opportunities that we have an immediate opportunities with respect to nuclear in terms of Kaiga 5 and 6, where we're expecting close to 500 to 600 crores of orders flowing in. Then we have refurbishment of reactors, 5 reactors coming in. So overall, I'm looking at what is the low-hanging fruit here is that we're expecting about close to 1,000 crores of orders coming in from nuclear division over the next 3 to 6 months. This is apart from what the government has announced, the budgets and all, that's all there. But we have enough on our plate, and all these projects have to be executed within the next 24 to 36 months. And that's what excites us more, and that's where your growth is also coming from the domestic sector.
And so just some visibility with regard to execution there, because what you are saying is 1,000 crore worth of orders. Is this specific to your internal target? Are you looking to win around 1,000 crores worth of orders, or is that the total opportunity size? That's my first part. Second part on execution, how quickly does execution start to play out and it start reflecting on your P&L?
this is exactly what we are going to get. It's not what opportunity. Opportunity can be more, but this is what we're going to get. Point number one, which is very clear. And the second part is the execution plan for this is about some of the projects are from 18 months and some are up to 36 months. So overall, you look at a 3 years period where you have to execute this entire 1,000 crores. That's where it is from the date of the purchase orders being released.
Interesting. Mr. Reddy, are there any newer products that come into this bucket? Simply because the reason I again ask this is, and I'm reiterating, right? Because hypothetically, I mean, I was looking at your numbers and I'm just trying to go with numbers because currently the market would be very intrigued with what comes out in terms of numbers, right? So if you've done circa 581 crores into FY24, right? And let's say you nudge about maybe 750 odd crores in FY25, hypothetically, right? If I do a 30% CAGR, it leads up to a number between 1,700 and 1,800 crores on margins. If they go up to 28% for a bottom line number in FY28, well in excess of 160, 170 crores. These are plausible estimates, you reckon?
These are definitely plausible estimates. The reason I'll tell you, last 1.5 years, we're working on various new customers, various projects. In engineering, as all of you know, it takes time to build the projects in terms of first articles, getting the certifications done, qualifications done. We have done a lot of product developments as well. So we have a very clear roadmap. So when I say 30% CAGR, it's very clear that we'll cross about 700 crores plus this year. And then from there on, we move on to a comfortable position of 30% CAGR year-on-year basis and improving our margins as well. So we have a very clear roadmap for the next 3 years, and a lot of effort has been done in the last 1.5 years, which you don't see in the form of numbers right now.
Of course.
And also, in terms of employee benefit expenses, we have been expanding our team for the future of the company. You know, if you look at our employee benefit expenses have gone up, that's eaten into our profitability, but that's just an investment. You don't just investment on assets, but you also invest on the team. That's what exactly we are doing. And for that, everyone should understand that we are doing this for the future of the company.
Sure. Can I just ask one final question, Mr. Reddy? And again, please excuse me because you are right. I look at the numbers. A lot of things are not available on the numbers. But because I'm looking at numbers, I'm asking this question, right? What had led to, and excuse my not knowing this, but what had led to this dip from 28% EBITDA to 13% EBITDA in March and June 2024, and it going back to these 28%. So what was it? Was it investments? Was it some bad luck in business or what have you? What led to this?
No, there's no bad luck in business, but there will be certain setbacks. Like we had some shipment deferrals during that period. One of our export customers had deferred certain shipments because there was a change in the model what we're working on, a particular design model which we're working on. For better efficiencies, we had to develop a new model, which took us almost like a couple of quarters. We were affected, but we were back on track. But also what we did was we have added multiple customers right now in multiple verticals. So that would not have that kind of a situation moving forward as well. So we have taken a lot of corrective actions in the past 18 months. And moving forward, we'll have a lot of verticals which will be firing up in terms of volume production based on our first article qualifications.
Great. Mr. Reddy, wishing you all the best for that and more. Thank you so much for taking the time out. And I look forward to talking to you post your quarterly numbers at the end of FY25, if you will, just to see how is it shaping up. But lovely talking to you today. That's MTAR Technologies. Hemang Jani, these days, I mean, everything good, bad, ugly is getting beaten down. MTAR, good numbers. Stock is down 3.5%, but you heard the management as well. You like the confidence? And I don't know if you studied this business at all.
So needed not looked at MTR technology, but defense we have seen deep cuts across, and this is despite many companies delivering a very good numbers. Let's say VL, the case in point, the growth was almost about 35-40%. Very good guidance. Even in budget, you had 12% kind of growth in the allocation to defense. HAL also similar kind of a story. And now Mr. Modi is in US, and probably you may get a little bit more clarity, and some of the apprehensions that people have about the defense order flows or something on order front, that can, we can have some, news flow around that. I do like the stories maybe because of the, kind of over ownership that we saw for some pockets. They are going through a bit of a correction. But given the pure fundamentals and the growth, I definitely would want to buy BEL and HL.
Okay. Right. Right, Hemang. Kush, your quick thoughts with regard to the technical side of things on this one?
Harsh, the stock is nearly 50% down from the high. The only saving grace or silver lining, if at all we're looking for one, is that this is the low that the stock had made in March of 2023, which means this is the long-term support that the stock is now testing. The volumes on the way down are thinning, which is also an addition. But I still wouldn't want to buy it just yet. I would want to see some sort of a revival and some sort of a confirmation on the price action. So maybe above the 1550, 1575 mark, about 100 points up move from here. Perhaps the stock could start looking a little more stable, at least technically. That's when you should consider. At the moment, long-term support average support being tested. So put it on the wait and watch list.
1,000 crore. Okay. Okay, Kush. Right. So those views coming through. But let's again go back, talk about the larger market. Now, Nifty slipped below 23,100. In fact, 23,000 now. We're below 23K levels. The Sensex has tanked as well. Mahima is joining us to tell us how have markets fared from the recent highs in September and give us perspective on what could be in store as well. Mahima.
Right. So, just to give perspective to our viewers in terms of the mid caps, the small caps, and the Nifty 50. If we see the Nifty 55 stocks, let's see the mid caps first. 11 out of 150 mid caps are trading below its RSI 30. In terms of the small cap, 23 out of 250 small caps are trading at the RSI below 30. And for Nifty 50. 5 stocks out of the Nifty 50 stocks are still trading above the RSI 60. So this is the overall picture of how all of these indexes are faring. In terms of the worst performance of the Nifty 50 stocks from its highs in September, it's a mixed bag of auto and the consumption space. Hero MotoCorp has fallen 32%, Trent 31%, Asian Paints 30%, Bajaj Auto 29%, and Tata Motors 29% from its highs. This, with respect to the mid caps, the worst performers have been Godrej Properties down by about 39%, Suzlon 38%, Thermax 38%, Delivery and Mangalore Refinery are the other two counters which have fallen 34% and 33% respectively. And the small cap, the worst performers that have fallen the most from its highs are Honasa Consumers on the back of how earnings have panned out for them. Their losses have widened 57% from its high. Sterling Vincent 55% from its high. Whirlpool India, where Whirlpool the holding company, the corporation is planning to sell further stake, down by about 50 odd percent. Chennai Petroleum down about 45 odd percent. Sobha down about 42 odd percent. Small caps have seen more pressure as compared to the mid caps when it comes to falling from their highs. So this is the overall perspective, and of course the stocks which have seen the most pressure when it comes to these markets, these falling markets in fact.
Okay. Thanks for that perspective, Mahima. Always good having that perspective on a day like this. Even I was a bit surprised, Neeraj, with the way in which some of these stocks have fallen. And there are a slew of counters in the last 4 months which have fallen 50% plus. Honasa, Whirlpool and the like. Just been a one-way ride for some of them. 50% of investor wealth wiped out. I wonder, you virtually have to double your money to recoup that. And that's what's probably adding to the pressure as well.
Yeah, I mean, and which is why I think a lot of, I think the one thing that this will do is, I don't know about all the markets, but certainly make people very cautious about investing in IPOs. It had become there were businesses launched which specialized in subscribing to the IPO and flipping it. I think that goes out of the window, and with good reason.
Right. Yes, absolutely. In fact, we did this piece on IPOs yesterday as well, Neeraj, where a lot of them, maybe 50% plus at the very least, have actually not made money even in the medium term. and therefore, that kind of vindicates and validates your point. But Hemang Jani, thanks so much for joining us this afternoon. We'll let you go. I know it's been a brief chat, it's been a brief conversation, but the texture of the market has been difficult, and we always value your views here. But we'll slip into a very short break. It's that time of the show where we'll take that break. Stay tuned. More perspective on NDTV Profit on the other side. Thanks.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. It's that time of the show where we take insights from everything that Somit's been hearing on the street, and on a crucial day like this, it becomes even more interesting to hear about what he's listening to. Somit, are you hearing calls, mild ones, of buy?
No. Straight answer, no. The market sentiment is very bad. In fact, for mid and small cap, what I've been understanding is that HNIs have been winding up their position. A lot of M2M losses is what they have incurred, and there are no new buys when it comes to mid and small caps, at least on the HNI desk, and that's a clear sign. FIs have been a clear seller that we know. DIs also not much of a buy coming in, and HNIs have also been winding up position. No new buys have been done. They're clearly in wait and watch mode, and they're waiting for some solid signs of buy flows coming in, especially from FIs when it comes to mid and small caps. So that's the first thing that I'm clearly getting in, and that is that there are no buyers when it comes to mid and small cap. Stock specific, REC, PFC and IREDA, all three power financiers are on dealers' radar. What we are understanding is that there have been serious delays when it comes to signing of new renewable power purchase agreements, and that could have an impact on the power financiers also, and hence there have been strong sell flows, aggressive sell flows when it comes to REC, PFC and IREDA. And lastly, it's Max Healthcare. Now this has been on dealers' radar. The stock is down 5%, but there could be some buy flows on this counter, so keep and watch out for this counter because there could be some initiating note coming in from some big broking firm, if that is what the dealers are indicating. So keep an eye out for Max Healthcare in trade at least. The stock is down 5% today, but this is on brokerage radar at least. Could come in.
Okay, could be interesting if. But Samit, thanks so much. So that's the intelligence viewers. Now, how it plays out remains to be seen, right? Today was a large brokerage house giving a note on Swiggy, and unfortunately, by virtue of the fact that the overhang of that pension scheme for gig workers is on track, so Swiggy is down 7% today after Citi initiated a fresh buy on that one. So quite interesting, the nature of the mood in the market. Avinash Gorakhshekar of Profit Mart Securities with us, and of course also joining is Aditya Agarwala on the technicals. I want to take forward that point on Swiggy, Zomato, Avinash, with you. I'll start off with you on this. Slam dunks on both of those in today's trade as well. Now, if one were to follow the principle of buying stocks which have fallen the most and which have a long runway of growth, then Swiggy and Zomato fit the bill day before yesterday, right? And they are still getting hammered. What's happening here?
No, I think, Neeraj, good afternoon first. My sense is, I think, we all are now addicted to Swiggy and the Zomatos of the world. So I think, this news about pension being paid to the gig workers is definitely going to dent into the profitability of both these players initially. But I think, they are smart, companies. I think all said and done, whatever incremental cost is going to be, accounted by the pension towards these gig workers is going to be finally recovered from the consumers. And I think, this is an industry where there are not many players, just two players. So I think clearly in the short term, on a bad day, the stock has corrected, obviously on the downside. But I think over the longer term, I think all these price corrections could be neutralized. I think none of these companies are going to take that cost on their on their balance sheet and on their cash flows. It's going to be a passed over component. So my sense is that, this business is going to grow by leaps and bounds. And I think, I believe that only the surface has been scratched. I think there's a lot of, runway available for both these players. And obviously, I think, Zomato looks much better than Swiggy because considering the fact that they have now got a very strong focus on profitability. Swiggy, on the other hand, could struggle in for some more time. But Zomato definitely looks to be quite ideally positioned, and somebody who's got at least a 2-year kind of plus view. I would not be surprised that eating habits and consumption trends are not going to change for players like Zomato. So I think on a broader level basis, I think one can definitely say that this is definitely a short-term setback for the company. But longer term, I think this will definitely get neutralized.
Right. Okay. So expecting some bit of neutralizing to happen. That's Avinash, of course, with regard to Zomato and Swiggy. Aditya Agarwala, what are you making of markets at this point?
Markets are definitely looking a bit weak. There's no doubt about that. But I think if you talk about Nifty and Bank Nifty specifically, Harsh, I think they're not going to see that kind of a waterfall kind of a correction. If I talk about correction in the markets, Nifty, Bank Nifty could remain sideways to a range bound movement. So 29 on the Nifty, I think 22,900 to about 22,800 something that can hold ground. On the upside, 24,000 will continue to act as a hurdle. So I think and then the bank Nifty, if I talk about, I think so 49,000 on the downside and 50,000 on the upside will remain as a resistance. Both the Nifty and the Bank Nifty should continue to oscillate in this band. It is the broader market, Harsh, which I think is dealing with kind of a sell-off, and that is likely to continue. I still believe there is room for downside in the mid cap and the small cap end of the markets, and that is where one needs to be a little more cautious and tread very cautiously. Look at stocks which are fundamentally strong, or maybe which have corrected significantly, are at good strong support areas. So stay away from that area. Otherwise, I think so if you're looking at large caps and banking indices.
Aditya,
yeah.
So mid caps and small caps have stocks in derivative space as well, right? You are negative here. Now tell us, where is it that you will go short?
So Zomato is one which I would go short. Neeraj, you were talking about Zomato and Swiggy. Zomato is one which I still feel has more correction on the downside. 190 is what I'm eyeing for on Zomato. One can look at fresh shots in Zomato at current levels, I think.
Okay, he's putting his money where his mouth is.
Yeah, absolutely.
Yeah. Okay, sorry, I pushed you onto a short idea, but what about your top calls for the day todays?
So Zomato is one which I'm going short on clearly with a stop loss of 225, a target of 190. The one that I've got a long recommendation is on Adani Enterprises. I think so it's done with its correction and consolidation. So Adani Enterprises is something which looks interesting to me. And if Nifty holds ground, I think so Adani Enterprises can be looked at current levels for a target of 2,500 on the upside. Place a stop loss somewhere around 2230, 2250. And Adani Enterprises can spring back and surprise you on the upside, I believe.
Okay. All right. Fine. Okay. So that's of course picks coming in from Aditya Agarwala, but I want to quickly take a view from Kush as well. Kush, talk to us about something like a trend. We've seen a huge correction where the stock is concerned. What's the technical chart looking like at this point now?
Again, I mean, not so encouraging. There was a hope that the stock would take support around perhaps a 200-day moving average, if not then the 20-day moving average, which is actually a lot lower than the 200-day moving average at the moment. Hasn't really been the case, and we know that this stock has actually started falling long before the markets did. So this kind of pressure, I think, remains. The saving grace on this one is that the 5,100 mark is a medium-term support zone. Last year somewhere. May to June, July, that's where the stock spent a lot of time before it moved upwards. So you could see some buying emerge, at this level, but I wouldn't really bet on it or preempt it. The reason being that the market scenario then and the market scenario now are very different. So any breach of this support zone of 5,000 could actually take the stock lower to 4750, 4800 kind of zones as well. Is it time to start nibbling into the kind of fall that the stock has already seen? Not sure. Again, because the reason being the volumes are not drying up on the way down. In fact, if you see for the last week or so, the volumes have actually picked up. So I would wait and watch. Look for a strong support zone near the 4700, 4750 mark. If 5,000 is breached, perhaps there, some accumulation can start.
Avinash, if I can take a quick call from you with regard to, let me push that thought. Let's look at the top 3 stocks on our radar today. First off, Mahima joining us with those 3. Mahima.
Right, so I'll start with Devyani International. The earnings came in and it looks like a strong set of numbers. Revenue was up 53 odd percent, EBITDA was up 43 odd percent, but margins have taken a hit to around 16.2% from 17.4%, and they've incurred a net loss of around 49 lakh versus a profit of 9.6 crores. Now, why? What has led to these losses? First of all, cost of raw material has gone up significantly. It's gone up by 64 odd percent. Finance costs have gone up by 39 odd percent. Depreciation has gone up by 58%. This is due to aggressive store expansion strategy. They've added around 250 net odd stores this quarter itself, and even the deferred tax went up to around 151 odd crores. All of these factors have led to loss of around 49 lakh rupees on the counter. In terms of store addition, the net new stores added in 9 months FY25 was around 250. Total 2,000 stores stand around Q3 FY25, where the guidance is already met, is what the management has said. In terms of the store-wise revenue and brand-wise revenue, KFC revenue growth was at 7.6% YOY. Same-store sales growth, however, lowered to 6.4 and was at minus 6.4 versus that of minus 2.7. So same-store sales growth has slowed down further, and this is of course on the back of more store additions. Pizza Hut revenue growth was at 1.8% YOY, but same-store sales growth improved to minus 5.2 from a minus 9.4 earlier. This is all 9 months FY25 data. And Costa Coffee revenue growth was quite significant, and this is on the back of a lower base as well. It grew around 37% YOY, and same-store sales growth, however, reduced to 3.9% from 7.9%. Now, this is with respect to Devyani, but the other two counters that have been buzzing on the back of earnings today are Grasim and Nykaa. In terms of Grasim, revenue was up 27 odd percent, EBITDA was down 48%, margins have taken a significant hit from 8.2 to 3.3, and there was a net loss of 169 crores versus a profit of 236 crores. In terms of key highlights with respect to segments, cellulose fiber EBITDA degrew by 18 odd percent, and China operating rates improved to 89%. Chemicals EBITDA increased by 25 odd percent, and caustic soda international average spot prices stood higher by 16% YOY. Building materials EBITDA was down by around 14 odd percent. Birla Opus, out of the 6 plants overall, 4 are already operational, and they've already incurred 9,015 crores of capex, which is almost 90% of the planned capex. Financial services overall lending portfolio was up 27 odd percent, and total AUM was up 23%. Other businesses that includes textile, renewables and insulators, EBITDA remains impacted by exceptional high input prices in linen segment, and renewable business cumulative installed capacity was up 37%. Lastly, Nykaa revenue was up 27 odd percent, EBITDA up 41%, EBITDA margin improved by 63 odd basis points, and net profit was up 52%. This counter has done well on the back of festive season, plus the Nykaa land initiatives that they have taken, and of course the discounts being given. Consolidated gross merchandise value grew by 25 odd percent. Beauty segment was up 32%, and beauty segment saw volume growth of 30 odd percent. Nykaa Fashion also witnessed a revenue growth of 21 odd percent. And lastly, the management has said that they are not seeing any kind of competition playing its role against their market share being eroded. So that's a positive commentary coming in from Nykaa management, and these are the top 3 earnings on my radar, at least for today.
Okay, thanks so much for that, Mahima. Really detailed link setting out the context with regard to those 3. Avinash, if I can come to you, all 3 relating to consumption. Devyani, different segment. Grasim, different segment. And Nykaa, completely different segment. How would you play consumption at this point? And at what point, if at all, would you start buying?
No, I think, Harsh, my sense is that if you look at the numbers for Devyani, I think one major disappointment has been the same store sales growth. I think for both the segments, KFC as well as Pizza Hut, I think, markets were expecting that at least some marginal uptick in the same store growth would come in. But I think on both those fronts, that has been negative. But on the positive side, they have now added a significant amount of stores. Now their total count is around 2,000 odd stores all over India. So I think, you'll have to wait for some time. I think clearly, the January to March quarter may not be all that great. But from April onwards, hopefully consumption should pick up. I think with the kind of fiscal benefits announced in the budget, plus hopefully, I think, customers coming back and spending more time on the dine-out facilities. I think Devyani definitely deserves definitely a good amount of re-rating once numbers start improving. I think for the last couple of quarters, we've seen Devyani not performing very well, specifically on the net profitability side. But considering their their parentage, which is Varun Beverage Group, I would say that this is definitely going to be a dominant player in the QSR space. So I wouldn't be surprised if the stock remains where it is. I don't think further downside looks possible, provided, of course, the January to March quarter is not another bad quarter. But they have shown a decent amount of performance in the quarter three as compared to quarter two. So I think in that perspective, I think it definitely deserves to be added in the portfolio if one were to take a long-term view, because I think consumption is definitely going to pick up. As far as Grasim is concerned, Harsh, I think these numbers were on expected lines. I think all their businesses have been down, but I think the paint business is currently in the built-up stage. A huge amount of capex has been incurred, and I think initially, the kind of exuberance which was done by them, I think clearly markets have realized that it's going to be a kind of a competitive war in the paint market. So
Avinash, allow me to come in. Avinash, allow me to come in. Manish Suntal is also there, but we need to cut across to Prime Minister Modi as he's speaking in France.
To draw an image of someone writing with their left hand, the app will most likely draw someone writing with the right hand. Because that is what the training data is dominated by. It shows that while the positive potential of AI is absolutely amazing, there are many biases that we need to think carefully about. That is why I am grateful to my friend, President Macron, for hosting this summit and for inviting me to co-chair it. Friends, AI is already reshaping our polity, our economy, our security, and even our society. AI is writing the code for humanity. AI is writing the code for humanity in this century. But it is very different from other technology milestones in human history. AI is developing at an unprecedented scale and speed, and being adapted and deployed even faster. There is also a deep interdependence across borders. Therefore, there is a need for collective global efforts to establish governance and standards that uphold our shared values, address risks, and build trust. But governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance. Governance is also about ensuring access to all, especially in the global south. It is where the capabilities are most lacking, be it compute, power, talent, data, or the financial resources. Friends, AI can help transform millions of lives by improving health, education, agriculture, and so much more. It can help create a world in which the journey to sustainable development goals becomes easier and faster. To do this, we must pull together resources and talent. We must develop open source systems that enhance trust and transparency. We must build quality data sets free from biases. We must democratize technology and create people-centric applications. We must address concerns related to cybersecurity, disinformation, and deepfakes. And we must also ensure that technology is rooted in local ecosystems for it to be effective and useful. Is AI's most feared disruption. But history has shown that work does not disappear due to technology. Its nature changes and new types of jobs are created. We need to invest in skilling and reskilling our people for an AI-driven future. Friends, there is no doubt that the high...
Well, PM Modi is speaking about reskilling as well, skilling and reskilling for an AI-driven future, also warning of the dangers around it. Well, one person who warned of dangers around mid-caps and small caps a little while ago was Manish Sonthalia, and we have him as well. Kush Bora, I know we haven't come to you, we'll come to you in a moment, but I just want to do a small conversation with Manish Sonthalia. He's Director and Chief Investment Officer at MK Investment Managers and joins us right now on the show. Manish, great having you. Thanks for joining in. And the reason I say it's great having you is because it's important to try and understand what do you think about the near-term trend. One is that because there's incessant selling, the easy answer is that there is very high probability of this going down further. Is there an extent that you have penciled in mind where you will believe that the valuations are starting to look interesting, or is it a moving part depending on what happens to earnings and the global macro?
So, Neeraj, for some time it was very clearly known that India's earnings are not going to be more than 10 to 12% for FY26 and FY27. In that backdrop, Nifty 50 would not support levels beyond 22,000, 22,500. I mean, that was a very clear given. Run up to Modi ji's results, the third term, on June the 4th, if I'm not mistaken, June the 4th, the levels on the Nifty were closer to 22,000. Now, in the euphoria of this 400 seats and whatever number was touted at that point in time, we took the markets up from 22,000 to 26,200. That was the excess part. And now, because of that excess being given up, we are looking at the levels back to being normalized at around 22,000. So the sense that I have, based on just fundamentals, pure fundamentals, is that markets will broadly bottom out closer to that 22,000 odd level. I firmly believe that markets would not sustain below 22,000 for a prolonged period of time. I don't know from where the buying is going to come, but clearly there will be merit in buying India at those levels. Secondly, Indian currency was overvalued. That was also clearly known, and Indian currency has depreciated. In the last 1 year, February 24 to February 25, from 82 rupees 90 paise to 87 and a half or 87.90 yesterday. So that is also closer to around 88. Maybe we'll go down to 90, but that would be the worst. So I would believe the last 5% is where the maximum capitulation is happening. These are great times to buy, and as we have seen in previous crises, whether it be the global financial crisis or the COVID times, whenever there this such letting down of the, just throwing away stocks at any price, those would be great times to buy. Now, as regards the mid and small caps, again, there was a caution that yes, valuations were running ahead of previous highs that we have seen in Indian markets, some 35, 40p. These were not sustainable. But it would be not correct to actually paint the entire mid and small cap space in the same brush. My sense is that if, let's say, the Nifty is trading at 20p and the outlook on Nifty earnings is like 10% growth. Like mid caps and small caps, if you're looking at buying more than what Nifty earnings growth is and valuations closer to Nifty earnings valuation, you should be broadly be fine. So just to say that the mid and small caps will fall down big time, I don't think that's there's enough merit in that, because if you just look at even the large caps, leave aside the Nifty 50, the Nifty 50 next in the month of January has also fallen some 7%. So just to say that large caps will do well and mid caps and small caps will not do well, I don't think that's going to have too much of a sound logic at this given point in time. It's too late to sell. This is the last bit of capitulation that you're seeing in the markets. Rupee has broadly fallen, maybe another 2 to 3%, and markets would have broadly fallen another 5 to 7%, 5% at the maximum, I would believe, and there would be comfort in buying at those.
Harsh, I don't know if Manish turns out to be right or wrong, but this is the advice, and this is the answer that is needed. One, that it is too late to sell a lot of things also, yes. And two, the market capitulates around these levels. I think this is the answer that is very much needed. In some sense, Avinash spoke about it at us, but Manish has just encapsulated it beautifully.
Yes, absolutely, Neeraj. Manish, Harsh also joining in. What I'd really be curious to understand from you on a day like this is, bulk of the pain has been faced by stock sectors and segments which are fast growing and where earnings for many, many years into the future, even though still realistic, were discounted. In the next 1,000-point odd fall that you broadly are suggesting will happen, what will be those sectors which will face a bulk of the pain? Will it still continue to be these segments?
No, so the budget that was presented, highlighted a few things. First is that the government's inability to spend more than 10 lakh crores. The last year budget figure of 11.11 lakh crores has been whittled down to 10 lakh crores. My sense is that the number of projects, etc., still needs to be finalized and all of that. So, sectors which were trading high beta and very high valuation based on order book figures for the next 5 years. And I have alluded to this fact that long dated order book positions can't be valued in the near term at the valuation that with the markets were valuing. So all the investment, this budget has basically told you that the pendulum swings away from investment related themes to consumption related themes. So I think, the maximum brunt of selling is happening where PEG multiples are more than 3. And it could be in any sector. But broadly, what we have seen over the last 3-4 years is that the capital goods, infrastructure, railways, defense, power, renewables, it has been glorified a lot. And, you are pricing in, let's say, the next 5 years of earning. That would not stand. And that is what is basically, likely to face the maximum brunt of the selling. On the other hand, given
this 1 lakh crores of savings, creating a multiplier of anywhere between 3 and 5 lakh crores on the consumption side. The consumption, which has not done well in the last 2-3 years, is going to be the new bright spot in the markets, particularly the discretionary side of things, which has been quite overlooked for some time. Because not only would you likely see earnings growth, but you could also see some multiple expansion, because you're talking about the multiplier of anywhere between 3 and 5 lakh crores, and the eighth pay commission recommendations are yet to come. And if the fitment factor is anywhere between 2-2.5, then of course that's again going to be an icing on the cake as far as the consumption is concerned. So the glorified sectors of the yesteryears, last 2-3 years, which had gone out of sync, whereas the earnings and the valuation are likely to correct more. Where there is value, deep value, contra, the banking, the insurance, these are some of the places which are likely to up.
Okay, Manish, if indeed, just one question from mine, and that's the last question from mine at least. The government, in order to reach the targets as they set out for FY25, would mean significant capex uptick in Feb and March. Sequentially, it will look very strong, but even an absolute number would be large, number. And therefore, the news flow would be strong, right? Would it therefore entice, and some state level capex numbers as well are looking solid, right? I mean, Andhra Pradesh is doing this whole new city, etc., so on and so forth. Bihar might do that. Would some of the infra, capital goods, cement led names look possible candidates? Because there too, the correction has been fairly swift.
So cement is clearly a proxy on housing, and given the impetus that is given on, 2 houses for self-occupied being away from the tax bracket, I mean, that's going to be beneficial, and obviously a lot of impetus on, household savings. That's going to be beneficial. So anything to do with home improvement, yes. Anything to do with, let's say, near-term capex, and obviously the numbers are going to be 1 lakh crore for, let's say, February and March. That is the capex number if you have to achieve the 10 lakh crore figure for fiscal year 25, that budget. But mind you, the valuations which are getting captured for, let's say, FY26, and the numbers before the budget was anything like a 20% growth on top of 11 lakh crores last year, revised estimates of FY25. I mean, those things are not happening. So from that point of view, I mean, the infrastructure capex related over ownership, overvaluation has still room to correct. But home improvement and cement and tiles and the plyboards, furniture, and all of these things would come within the consumer discretionary space. Building materials, those would be standing to gain according to, because the valuations are extremely comfortable, and you are looking at a growth cycle as far as the building materials per se is concerned. So that would include even the paints. They have also not done well. Everything related to home improvement, because there is more money in the hands of the consumer, likely to do well.
Okay, Mr. Santhalia, great having you on a day like this, and getting that perspective. Always a pleasure. Thanks so much for coming in and speaking with us and being very patient because of the last minute cut-in that we had to do. But let's take a quick break on that note. On the other side, we'll get you top BTST ideas, and of course, we'll chat with guests because they've been waiting by as well. So stay tuned.
Another day, another bloodbath for the markets as the mid-caps and small caps go into free fall. All indices in the red. Realty and media stocks dragged down. The rupee recorded its largest surge in more than 2 years. The 84 paise spike is the currency's biggest jump since November 2022. Traders say the Reserve Bank of India stepped in to support the rupee. President Donald Trump halts prosecution under the Foreign Corrupt Practices Act of 1977. He says he wants to reduce enforcement on US companies. Six US congressmen write to the new Attorney General Pam Bondi demanding an investigation into the Department of Justice under Biden. Citing the Adani case, they write that DOJ under Biden had endangered the important equation between the US and India. It's an NDTV Impact story now. SEBI exposes LS Industries 5,500 crore valuation as stock scam. This is after NDTV Profit flagged how the company with almost negligible revenue had a valuation this huge. Prime Minister Narendra Modi visits France to co-chair the AI Action Summit with President Emmanuel Macron. His 3-day visit is expected to hold bilateral talks with and address business leaders.